Good morning, everybody. Welcome back to another episode of the Market Open. I am sorry I am late. We had a couple of technical difficulties, but we are here. We are live. The comments are hilarious. Amit is busy crying. Well, today might be one of those days where a little tear ends up coming out, and it is what it is. We will talk about it. We have a lot to talk about today. Yes, I wore the UPS hoodie because I have to go back to working at UPS. The comments are great. And today is a day where the comments have to be great because rather than crying, a little bit of laughing is probably going to be necessary today to stop ourselves from crying. The S&P 500 is down 1.4% in the pre-markets. We are at 646. We got to 658 yesterday. We are down. There's a lot to talk about why we are down. Obviously, the number one reason, for those that don't know, there's not macro data, jobs data, although we do have some jobs and macro data today, but that is not the reason I think that we're down. In fact, some of that data is relatively not that enticing, I think, for the markets to react to. It is because of President Trump's speech last night on the Iranian war. Every media publication kind of framed the speech as a sort of ending to the war and a proclamation that the war will be over and a sort of acknowledgement to the American people that we have achieved our strategic military objectives. And that's exactly what he said. But on the flip side, he also said, which is why the market is so confused, that not only have we achieved our military objectives and we will be leaving soon, but we will continue to bomb Iran and we will continue to, in the lack of better words, escalate the aggression. We got some headlines this morning that is only proving the escalation of that aggression. And as a result of basically the conflicting narratives of what Trump was speaking about, on one hand, he's saying the war is over and we've won. On the other hand, he's saying we are going to continue bombing them, which obviously means the war is not over. We have not won, and we have not gotten any ships to go through the Strait of Hormuz to reopen it. Oil is at $111 in the pre-market. We're up 11%. This is like not good, and not good is putting it very light. We cannot have crude pumping at the levels that it's pumping. I remember the top for this year so far was 120. So, I mean, the idea of 120 being the top and that only being $9 away. I mean, we kind of went below 120 3 weeks ago, and we stayed meaningfully below 120. Now we are not meaningfully below. I mean, we were at 99 yesterday. And based on what Trump said in that speech, it's making a lot of people reconsider the aggression of the war, the concept of the war. And, you know, the far majority of people, I think, based on the polls that I've done in the chat over the past couple of days, was rooted in disbelief of any of this green momentum and skepticism, quite frankly. This is why I think a lot of people ended up selling covered calls yesterday, or at least not getting too aggressive in terms of deploying capital. And I think that is a fair point. The covered call, once again, is going to be the only thing that helps save my portfolio this morning, as we are seeing a dramatic drawdown. Rocket Lab down 5%, D-Wave down 4%, Marvell down 4%, Microsoft 365. I mean, if we keep going like this, NVIDIA down to 171, I don't know how the market's going to open, and we'll talk about kind of the implications of this and where price action might lead. But if we continue on this trajectory to the downside, those Monday lows are not going to be the Monday lows for the year. I mean, we are going to go lower than those Monday lows, and we are not that far away. So, I mean, there is a lot to analyze and discuss, and I'm going to be, quite frankly, very curious in the next 37 minutes when the market opens, how the algos decide to play this. Because as of now, as per Trump's comments, they're pretty upset and they're pretty pissed, and you're seeing a lot of the gain that we had over the past couple of weeks being given back. I wonder if that gain continues to be given back and we actually make net new red for the year, which would be below 630 on the S&P 500. Let's get into it. Thank you, everybody, for being here. Good morning, good morning, good morning. I know today is probably a very emotional day, an ugly day. We had 2 days of full-on green, almost 4% on the S&P 500, added almost $3.5 trillion of market cap. Most of that, not most of that, but about 65% of that has now been eliminated as per the pre-market action. It's a very choppy and annoying situation to be in. However, just like we talked about yesterday, I think most of us acknowledged if we were to lose all of the gains, which would suck because we had a 4% move in 2 days, but if we were to lose all of it, would it actually surprise anybody? And I think, we do get the Tesla numbers today. All right, that's going to happen probably in like 7 minutes. You just said 9:05, maybe 10 minutes. So I'll have that loaded up. But, usually it's one of those things where it's like for the past couple of weeks, for the past couple of months, February and March, whatever green we got was met with red. Whatever red we got was met with a little bit of green to give us a little bit of hope. And then it was met with red again. We have not had 3 red days in a row, it seems like, since early January when we had sort of high beta momentum. And today was going to be that third red day or third green day in a row. Monday and Tuesday were Tuesday and Wednesday were pretty damn green. I mean, yesterday we were up 1% on the S&P. The question was, could we keep it going? And that speech just didn't do it. That speech just didn't do it. So we will talk about the speech. We will talk about what's going on. And then we'll obviously talk about price action as well as we get into it. You can put your prediction for the Tesla delivery numbers. Honestly, I have not focused that much on what the expectations are for deliveries for Tesla. Quite frankly, I don't even think it matters. And why doesn't it matter? A simple example. Red Cat won a big military contract today for their Black Widow drone. Stock's down 2.5%. Like it's one of those things where winning contracts and getting new revenue and increasing your margins and this and then getting an upgrade from an analyst, none of that matters when oil is pushing 120 and the stock market is starting to price in. Wait a second, if oil stays this high this long, inflation's going to tick up. If inflation's going to tick up, we're definitely not going to get rate cuts. And even worse than not getting rate cuts, people are going to stop spending. If people stop spending, demand's going to go down. If demand goes down, corporate earnings are going to go down. That is the simple way to get us into a recession. It is very easy to fall into a recession with oil being this high for an elevated period of time. And that's what Trump's speech was supposed to hedge against yesterday. And it did the exact opposite. It did the exact opposite, which is why we're seeing the ugliness that we're seeing right now in the pre-market. All right, so let's get into it. I think we will get the number pretty soon for Tesla. And we'll see what ends up happening with Tesla. But until then, probably in like 5 minutes, we'll talk about what happened last night. So first of all, high-level overview, and then we'll look at some of the clips that Trump said. There were some key moments where if you were with me and Steve on the stream yesterday, you saw my face. As soon as my face kind of cringed, I knew that it was not going to be pretty. I didn't know it would get this ugly, but as soon as Trump said a couple of things, almost everyone could say, yeah, the market's going to go down on that. And unfortunately, he ended up saying about 3 or 4 of those things that got the market to be upset. All right, so number one, Trump said the war is essentially over, but that the U.S. would continue a bombing campaign for 2 weeks. The market did not like that. The market wanted Trump to say, we're done. We've achieved our objectives. By Trump saying that we are engaging in a continued bombing campaign, the market was like, wait a second, that's not good. Like, that's continuing to escalate. Why is that not good? Well, we got a headline this morning. Kamal Khazari, Iran's former foreign minister, has been seriously wounded following U.S.-Israeli strikes on his home that also killed his wife. Khazari has been overseeing talks with Pakistan, one of the intermediaries, to arrange a possible meeting between Iranian officials and J.D. Vance. This is why, I mean, this headline is absolutely emblematic of why the markets dumped last night, because Trump says we're going to continue bombing. The market didn't think that Trump would say that, or the market at least thought, like, even if he already said that, it was kind of a threat. It wasn't that serious. Trump was like just saying that to grandstand. And then you get a headline this morning that the dude's wife has been killed and he's seriously injured. And he was one of the guys who was leading the framework for the negotiations with the intermediaries around Pakistan, J.D. Vance, and Iranian officials. And so, yeah, not a good thing. The market did not like that. Number two, Trump said that if a deal is not reached in the next 2 weeks, then the U.S. will conduct strikes on energy infrastructure in Iran. The market did not like that. The market also did not like that. Why did the market not like that? Well, because at the end of the day, if the market is saying energy prices are going to go up based on the idea of the war not ending, based on the Strait of Hormuz not opening, and now factoring in this potential conducting of strikes on energy infrastructure, the market kind of has to price that in a negative way, right? Because let's say there is no deal in the next 2 weeks. Why would you buy stocks right now if Trump is telling you explicitly he's going to strike all the energy infrastructure, potentially target Karg Island, where 90% of the crude exports go through in Iran? I mean, there is no way in hell you can easily, at least on an institutional level, buy equities knowing that if a deal is not reached in the next 2 weeks, this is what's going to happen, unless you think Trump's not going to do that, which at this point is up in the air on what this guy's going to do. So that is also something the market didn't like, because they're like, okay, we'll wait for the next 2 weeks. if you're going to give us a 2-week timeline, if you're going to explicitly say 14 days, we're going to wait 14 days and see what happens. And if you're going to start conducting strikes, we're just going to keep selling stocks, because why would we invest in anything if we know that oil is about to go up? And then finally, Trump said that NATO countries, this was rumored that he was going to really kind of make an argument around how NATO countries have been bad. They're doing nothing to help, and that if they want to take oil, they should either buy it from the US or go to the Strait and quote unquote, take it themselves. Markets, once again, did not like that. Trump is essentially downplaying the importance of the Strait, which you can't do, because the reason oil is up 50% this year, 100% this year, is because of the Strait of Hormuz being closed. And as a result, by claiming that oil can easily be bought from the US, he's essentially kind of just like, it's almost like BSing, right? The market's like, no, oil cannot just easily be bought from the US. That doesn't change the sort of flow of supply chains around oil across the entire world. And even if NATO countries were to buy oil from the US, that doesn't necessarily take the price of oil down. That just means they have access to more supply. The Strait of Hormuz is still very important. And then secondarily, Trump says that NATO countries need to get more courage, and that courage would allow them to just go take the oil from the Strait. You've got a lot of people asking, wait a second, why doesn't the US, who has a much better military than any NATO country, just take the oil from the Strait? I mean, it's just like it's like 1 + 1 = 2. It's like you're telling Germany and France to muster up the courage and just go take the oil. And it's like, well, why doesn't the US do that as well? And you would say, well, the US produces a lot of oil. It's like, okay, well, being able to just get your ships through the Strait or escort other countries' ships through the Strait would start easing the prices on oil. But obviously that would create an incredibly bad military confrontation, which is why we have not gone that far. And so all of these conflicting narratives, all of these arguments going back and forth is why the market, it seems, in my opinion, is dumping, just based on the idea that, once again, there is zero certainty on how this is playing out. And for the past 48 hours, there's a little bit of certainty, and now we are back to no certainty. Tesla deliveries, they are out 358,000 versus 372. That's a miss. Production, 408,000 versus 388. That's a beat. Model 3 and Model Y, 341,000 deliveries. That means the Cybertruck did like 17,000. Dude, I love the Cybertruck. I actually have a contrary opinion. I like how it looks. I think it's a cool car, but man, that product has not worked. That product has not worked. 358 versus 372. 358 versus 372. They produced 394,000 Model 3, Model Y. Versus 377 expected. So they beat on productions. They missed on deliveries by about 20,000. Where is Tesla stock? We are down 4%. I don't know if this is just because of deliveries, though. I mean, it was already down, right? So it was around 360. That was around 370. So you're down a couple more bucks. So we were already down. Seems like it's going down more, but that is your number in the context of Tesla. Once again, this company has not grown earnings in the past 3 years. And so the people that are paying a higher multiple for it obviously are paying for the potential of growth. I don't even think the delivery numbers matter that much, or like the raw like output of revenue. What matters is just progress on robotaxi. And quite frankly, that has not been that encouraging. They got it in a couple cities. I mean, people can overlook the crappy numbers if you could somehow make the argument that the robotaxi is expanding at a phenomenal scale, or that Optimus is, being produced at a heavy scale. And that's just not happening yet. And so if you're a Tesla investor and you're buying Tesla actively, you have to hope that robotaxi and Optimus scale in the near future, or you have to hope that they merge with SpaceX. But the actual earnings themselves, I mean, there are nothing compelling in these numbers. Energy production, I imagine, is still at a record high. And again, I'm bullish Tesla. I do think this is going to be a very important company one day, or in the future, I should say, more valuable company than it is today. The problem is the numbers don't make sense in the context of the valuation, which is why NVIDIA, Meta, all of these are just better buys if you only care about a PE. If you don't care about a PE, you care about potential, then you got to take a bet on Elon. And that's where you end up buying it. Energy was 8.8 gigawatts. That's actually a decrease quarter over quarter, right? Is that a decrease? 8.8 gigawatts. I think they did 12 last time. If I'm not wrong, last time they did 14. Wow. 14-8. Oh, that's actually worse. Now you're not, the one part of the business that was growing, which was energy, which doesn't even contribute. I mean, it contributes like 2% of the revenue. So once again, the valuation was just very hard to make sense of, no matter how you slice it. 14 in January, and now you are looking at 8. You're looking at 8.8 gigawatts. Wow, this was not a good quarter. The stock right here, 365, down 4%, starting to get hit a little harder. I mean, just objectively, that wasn't the best. It doesn't seem like that was the best. Long-term, Tesla should be a very, very important company in the future. Short-term, the earnings have just not been able to live up to the multiple. But then again, the multiple has been able to sustain itself because it's Tesla. And so, you know, again, I don't think any of these numbers change your thesis if you were long or short Tesla. It's just objectively, numbers aren't really the best for this Q1 metric. 4% down on Tesla, Nvidia down 2.7, Robinhood down 5, S&P still down 1.5% on the day. Oil is going crazy, which actually should be a tailwind for Tesla, but unfortunately, given the lack of earnings growth and deliveries growth, you're probably not going to see that priced in today. Crude, 112.6. 112.6. How do you even go from 14 to 8? Yeah, that's a good question. Dude, isn't energy demand at a all-time high? Like, shouldn't they be like accelerating that rapidly? Was there something in Q1 that like hurts them that bad? Like, where was Q1 last year? Q1 last year. Oh my goodness, is that? Dude, this is down year over year. Forget Q1 last year was 10.4. Oh, Elon's got to explain what happened. Elon's got to explain. This is not a quarter over quarter decline. This is a year over year decline, which is the worst type of decline you can have for investors. Because after a year, if you can't grow the business, I mean, people start questioning what the hell's going on. Wow, did not expect to get that. Usually energy is the one that outperforms, but all right, that's what you got on Tesla. That's what you got on Tesla. We'll see how the stock reacts throughout the day. Overall numbers just not as good as what the street wanted, but crude pumping at these levels. I mean, I would imagine Donnie T has to come out and say something, dude. You cannot have oil get to 120. The 10-year, why not 4.35? This is also not going to really do well if crude continues to pump. And you're not going to see a lot of momentum right now. Yes, tax rebates are gone. That's also fair. That's an argument. BYD potentially increasing their focus in China. That could be an argument. IMF predicts U.S. job growth to be less than 50% of the rate observed in the 5 years before the pandemic. A lot of these predictions on growth are going to start coming out more aggressively based on the idea of oil prices being higher for longer, and obviously that having an impact on demand. So when oil starts pumping like this, you're going to start to see growth projections get hit pretty decisively. All right, let's listen to some of the stuff that Trump said yesterday. Then we have some jobs data and a bunch of other macro stuff to look at. So I have a couple of different clips. Here's the first clip that got the market excited to an extent, but ultimately, the market was not fully sold on the idea that this is going to play out in the right way, especially when Trump started comparing the perspective of all the other wars we've had and how long they've lasted.
We'll hit them with missiles very hard again. We have all the cards, they have none. It's very important that we keep this conflict in perspective. American involvement in World War I lasted 1 year, 7 months, and 5 days. World War II lasted for 3 years, 8 months, and 25 days. The Korean War lasted for 3 years, 1 month, and 2 days. The Vietnam War lasted for 19 years, 5 months, and 29 days. Iraq went on for 8 years, 8 months, and 28 days. We are in this military operation, so powerful, so brilliant, against one of the most powerful countries for 32 days. And the country has been eviscerated and essentially is really no longer a threat. They will hit them.
So as you can see, when Trump starts bringing up all these different wars and how long they lasted, ironically, because this is not a war, so he's comparing it to other wars, but this is supposedly not a war. He's making the argument that this is only 32 days. But that's not encouraging to the market to know that you're comparing it to all these other wars that lasted much longer than 32 days, unless you actually definitively say there's an end to this war that we finished. And unfortunately, that's not exactly what he said. He kind of said it in this next clip, but then he started talking about the Stone Ages.
made clear from the beginning of Operation Epic Fury that we will continue until our objectives are fully achieved. Thanks to the progress we've made, I can say tonight that we are on track to complete all of America's military objectives shortly, very shortly. We're going to hit them extremely hard over the next 2 to 3 weeks. We're going to bring them back to the Stone Ages where they belong. In the meantime, discussions are ongoing. Regime change was not our goal. We never said regime change, but regime change has occurred because of all of their original leaders' death. They're all dead. The new group made clear from the beginning of Operation Epic Fury that we will continue until our...
So he says it's over in 2 weeks, but then says we are going to continue bombing them. That is not something that the market liked because they said, okay, the bombing will continue. And then he said, if there is no deal in 2 weeks, and I think this is a real clip that got the market to be upset, then we're going to hurt their energy infrastructure.
Time no deal is made, we have our eyes on key targets. If there is no deal, we are going to hit each and every one of their electric generating plants very hard and probably simultaneously. We have not hit their oil, even though that's the easiest target of all, because it would not give them even a small chance of survival or rebuilding. But we could hit it and it would be gone, and there's not a thing they could do about it. Time no deal is made, we have our eyes on key targets. If there is no deal, we are going to hit each and every one of their electric.
So again, if he's talking about we're going to be hitting their energy plants, if there's no deal, if he's talking about there's going to be more pain coming, all of this stuff is just not what the oil markets want to hear. And obviously, if the oil markets don't want to hear that, the stock market doesn't want to hear that either. And then Trump said to the countries that can't get fuel, just go to the Strait and take it yourself.
So to those countries that can't get fuel, many of which refuse to get involved in the decapitation of Iran, we had to do it ourselves. I have a suggestion. Number one, buy oil from the United States of America. We have plenty. We have so much. And number two, build up some delayed courage. Should have done it before. Should have done it with us, as we asked. Go to the Strait and just take it, protect it, use it for yourselves. Iran has been essentially decimated. The hard part is done, so it should be easy. And in any event, when this conflict is over, the Strait will open up naturally. It'll just open up naturally. They're going to want to be able to sell oil because that's all they have to try and rebuild. It will resume the flowing and the gas prices will rapidly come back down. Stock prices will rapidly go back up. They haven't come down very much, frankly. They came down a little bit, but they've had some very good days over the last couple of days.
This was that was the part that Steve and I started cringing at because basically he insinuated, well, you know, stock market hasn't tanked that bad. I thought it was going to be worse, and it ended up tanking overnight, and it is much worse than what we thought. S&P right there down 1.5%. So the culmination of what happened last night is Trump was supposed to come out and assure the 4% gain we got over the past 2 days to the equity markets that was a legitimate gain, that is a good thing that the markets re-injected that capital. It was a injection of capital that was justified and validated, or should have been validated based on the progress we're making on the war. And the exact opposite happened. It was more arguments about bombing, more threats about what we're going to do, more sort of like weird claims about if you want oil, just go to the Strait and take it. And it's like, well, hold on. Are you telling every country to just get the courage to go, go to the Strait and just start shooting people and like getting into military conflicts? Like, what are we talking about? And why isn't the US doing that if it's so important to just open up the Strait of Hormuz, which obviously it is important? Then Trump started to downplay the importance, which the market got mad about. But then him telling other countries to just go do it yourself, it almost lacked any level of logic or reasoning in terms of how the market was interpreting it. Now, again, if Trump is just saying all this stuff for the hell of saying it, and he's not serious about anything, and in 2 weeks, we're not going to be bombing Carg Island, and we're going to have some level of potential delayed versions of peace, and maybe extend the timeline from 4 weeks to 8 weeks based on how it plays out in the next 2 weeks. We'll see what happens. Then this pre-market red might be a little overdone, and it might be too aggressive based on the idea that it's going to get that bad in the context of bombing the energy plants. I think the natural Trump put is that if he bombs their energy plants, oil prices skyrocket even more, which is horrible for U.S. equities, horrible for U.S. demand, horrible for consumer confidence, all that stuff. But if he's serious about it, or even if the perception of it is that he's serious about it, the market obviously has a very, very difficult time to believe that they should be buying equities right now, or that any of the gains that they had over the past couple of days are legitimate enough to sustain themselves in the equity markets. And that's why oil seems to be pumping right now. So I will put a poll in the chat, and let's take a look at the sentiment. The sentiment yesterday was that I think it was 60-40 on 60% didn't trust the green, 40% did. I mean, it's kind of the same question, but flipped today. Do you think this red gets worse will be the question. AKA, is this enough pain that we're seeing in the pre-markets, or does it need to get a lot worse? Yeah, it was a very sophisticated April Fool's joke by Trump by taking away a decent chunk of the gains that we had. And I don't know if this becomes a bloodbath. I mean, obviously it's ugly. It's not nice. Rocket Lab back to the left. Rocket Lab. So the Monday lows we have not breached yet. Rocket Lab was 57. Robinhood was 60. Palantir was 138. S&P was 630. We haven't got into that level yet. And I really wonder, we would need, if we do some quick math right here, we would need on the S&P another 2.3% down. That would be, I mean, that would be basically a 3.5% reversal in one day, which would be very ugly if we were to get that. And obviously I'm hoping we don't get that. But if we do, even the covered call, like the covered call protects if the stock falls 2 to 3%, if the stock falls 7 to 8%, you know, your call premium is just not going to be enough to offset the losses on the actual equity. And so if you have some level of hedge in your portfolio, and this is why, you know, having hedges are important, at least if you're trying to manage a long position, whether it's buying puts or having covered calls or calendar spreads or something that allow you to benefit from the volatility, because in this administration, you just can't trust that it's going to be okay as much as you want to trust it, which is what I think the majority of people said yesterday. It's like you don't fully trust that the bottom is in and that it's time to meaningfully deploy capital. The one thing I am happy about, I joked about it yesterday that I bought the bottom on Monday, but it was only with $2,500 because my $35,000 didn't transfer over to my retirement account. Today it did transfer over. And I was sad on Monday that the 35 didn't transfer because I would have just spent all of it and bought the bottom. And now I'm kind of happy that I'm happy the financial system in this country takes days for money to get transferred from one place to another, because now I get to keep that in cash. And my example is a very small example of a lot of people that are probably keeping money in cash and just freaking waiting until they get real confirmation or think, you know, the blood in the street is getting much worse than expected. And that's probably 6,000 S&P, which is about 5 to 6% down from here, which at this point, who knows if we end up getting there. S&P 500, 1.47% right here in the pre-market is what we've got. Oil is signaling a limit down day. Oil is definitely not signaling something positive right here. I mean, 11%. We haven't had an 11% day on oil this whole year. We've had multiple days come together where oil gaps up. The last time we saw oil go to 120, which was when it was up, I think, 15, 20%, it gapped down immediately the next day after. And then we fell below 80 at one point. And then we started going through this whole up and down choppiness with Trump. So this is actually one of the single biggest increases in oil I think we've seen since the beginning of the war, March 4th. And if it sustains itself throughout the end of the day, VG, Oxy, all those are pumping. You know, that's not going to be a good thing for the equity markets. Are you going to buy today? Hell no. Now, and my hell no comes from what I heard last night, which is I'm not, as an individual investor, I'm not getting any level of certainty that this thing is going to be over soon. I'd rather buy if the market's higher in 2 weeks with way more certainty that we have a deal and that the war is over. I am not going to trust Trump and say this is a buy the dip moment for the hell of it, because how could you, if he's going to keep bombing, even if you think he's bluffing, but just the idea that he could be not lying, or the perception that this will continue in terms of these threats that he's making, if oil keeps spiking, inflation is going to go up. If inflation is going to go up, we're going to have reduced demand. If we're going to have reduced demand, earnings are going to suffer. Like, it's a very simple, logical syllogism to be able to get to the end point, which is that it's ugly. Now, does that mean sell everything and go to cash? No, that's just not what I believe in. That's not my philosophy. That's not how I do things. Still have a lot of long equity that is hedged with covered calls, but net new capital being deployed, you need some level of freaking confidence. And these prices are stupid, so I don't blame anyone who wants to buy the dip here. But my opinion has been pretty consistent for the past 2 months. I haven't blamed anyone, including myself, for buying the dip at all over the. I bought the dip on Nvidia at 185 because I thought that's a reasonable price given the multiple. Now Nvidia's at 170. So do I blame myself for buying it at 185? No, I didn't know we would get into an entire war that would spike oil up 40%. But the point is, stocks have been on discount, at least individual stocks, maybe not the broader market if you're looking at the historical PE, for a couple months now. I mean, Microsoft's in a 32% drawdown. But the confidence to deploy that capital and accurately feel like you're getting some level of a deal and not just buying a falling knife, it's not there. I think it's not there for a lot of people. Definitely not there for the institutions. And I think that's why we're seeing the level of pain that we're seeing right now. Jobs data and Blue Owl. We got two of those headlines that we got to look at. So U.S. Challenger layoffs came in at 60,620 in March. This is not non-farm payrolls. We're going to get that tomorrow. The markets will be closed tomorrow. I will not be live for the market open because the markets will be closed tomorrow, but the credit markets will be open. So we will see how the credit markets react to the non-farm payrolls. U.S. Challenger layoffs came in at 60,620 in March, up 25% from February, but down 78% from a year ago. AI was the top reason for cuts in the month at 15,000, 25% of the total, while tech led all industries with 52,000 layoffs so far announced in 2026. So this was not the best jobs report. It was not the worst jobs report. But in Q1, a total of 217,000 jobs cuts were announced. This is actually the lowest Q1 total since 2022, which is why, it's not the most bearish jobs report that we've got. However, tech is leading the job cuts with over 50,000 announced. This is actually higher than the same period in 2025. Now, why does that matter? Well, those tech jobs are well-paying jobs. Those jobs are also, one could argue, being replaced by AI, as we've seen, the consultants and product managers, junior level engineers potentially not be needed as much anymore. Bitcoin falling below 66 right there at 65,919. And as a result of that, if that trend continues and you start to see more of those people lose their jobs, even if the overall job growth is not as bad, the initial jobless claims also came out this morning, 205,000 versus 212,000 expected. Again, really not at recessionary levels, not something that people should worry about until we get closer to 250, 275,000 a week. If we continue to see that trend, that obviously would not be a good thing for the labor market, but it's also not such a horrific thing that rate cut probabilities get to come up. And right now we were at a 0.5% chance for a hike yesterday for April. We are now at 2.6%, which is not a dramatic increase, like 0.5 to 2.6. But the reason it's up is because oil's up. And if oil continues to go up, the idea of a hike, which, I mean, if we hike, I don't know what the hell Trump is going to do. I think he might lose his mind if we actually hike rates. It becomes more prevalent. And even Kevin Warsh, who probably has told Trump in the, backdoor meetings that they had that he wants to cut, even he's not going to be able to compel the Fed governors to vote for a cut if inflation continues to be at these levels. So that is why it's ugly. That is why it's ugly. The jobs data is not bad, but the speech last night is being perceived as very bad. And I wonder at 9:30 in 7 minutes, if this flips, I wonder if this is just like, the futures being the futures and we actually flip green. We've seen it happen many times. We've been super green. We've seen it flip red many times. Sometimes you just don't know. But obviously, based on the price action, it does look rather ugly. And people are going to have to call a lot of BS on everything Trump said for them to buy stocks today, which might happen. Again, I would not rule that out. That very well could happen. Trump could put out a tweet and change the direction of the stuff. But as of now, 12 hours later from his speech, it definitely looks like people are just afraid that this war is going to last longer than expected. Blue Owl. We got a really bad headline on Blue Owl this morning. Private credit has been something we've been talking about on the show for the past couple months now. So this is what you got for Blue Owl. They are seeing a 40% increase in redemption requests. They're seeing a 21.9% increase in Q1 redemption requests in their credit income side of the business. In their technology side of the business, they're seeing a 40.7% redemption increase. Another fund, OCIC Blue Owl Credit Income, received 22% redemption requests. Blue Owl said it would cap redemptions at 5% in accordance with the fund structure, reflecting our commitment to balancing the interests of both tendering and remaining shareholders. This is ugly. And the reason this is really ugly is because it's not just Blue Owl. You can't, I mean, Blue Owl is looking like the worst of it, but you got to imagine the Apollos, the KKR, the Blackstones. They are probably getting some requests from their clients. Blue Owl, wow, 7% down in the pre-market. Remember, one of the biggest loan buyers for SoFi is also Blue Owl. Just being associated with them, I think, has not been the best for SoFi. SoFi down 3.3% in the pre-markets. You would imagine that all of these different institutions in the context of private credit are facing more redemptions. The Blue Owl turned into the Orange Owl. Yes, it is officially the Orange Owl now. And as a result of the increase in redemptions, now, does it have an actual impact on the broader economy? Is this 2008 with the mortgage crisis? No, I don't think so. I mean, maybe I'm wrong. I'm not that deep into understanding the private credit world, but this is a lot of family offices, high net worth individuals that took a chance, invested in the private credit markets in 2019, 2020. They invested in a lot of tech names. Those tech names were software businesses. AI came in, started disrupting the necessity of growth, or the potentiality of growth for those software businesses based on agentic infrastructure. And now those software companies, just like in the public markets, Salesforce, Adobe, ServiceNow, et cetera, Intuit, are getting re-rated. So in the private markets, of course, those companies are going to get re-rated. This is why I'm saying the Stripe valuation makes no sense. The Databricks valuation makes no sense. The SpaceX valuation makes no sense. Like, if the private credit markets are facing all these redemptions because investors are like, hey, I'd rather take my money out of whatever shitty software company I invested in 2020 because you guys told me it was going to be above market returns, and I'd rather put that into Meta, which is growing 30% and is likely not going to get disrupted by AI because they're utilizing AI for advertising. I'd rather put my money there. And you've got the private equity funds now and private credit funds trying to make the claim that, you should still trust us, which is not that easy to do when you're dealing with this amount of redemptions or at the level of scale that it's being called for. And that's why it's a mess. I don't think that ruins the financial system, simply because a lot of this is insulated towards those high net worth individuals and family offices, et cetera. But if that starts creating a cascading effect across the entire economy and sort of a contagion, then yeah, it obviously can have an impact. Maybe it's not 2008 level impact, but it can have an impact. And it's just another narrative that this market does not need, given we're dealing with a war and high oil prices. But we do have this narrative right now, and it's not necessarily helping in this moment. So it's ugly. It's ugly, guys. It is absolutely ugly. There's not any way to hide it. Now, granted, sentiment is so bad right now. Maybe we're closer to some level of capitulation, but that is just pure cope on my side because what we got last night was not good. And again, for me, I'm not the type of person to just sell out of everything and go straight to cash. That's just not how I manage my portfolio. I think most retail investors do not manage a portfolio like that, but I'm damn sure hedging with aggressive covered calls, and the price action we're seeing this morning is why I like for those that are scared of the covered call because we're gonna get some massive V shape and go straight to the moon like we did last year after Liberation Day. There's a difference between Liberation Day and tariffs and getting out of a war, and it might be as easy as Trump saying we're leaving the region, but he's not saying that. And every time he says that, the market rallies, and then he says something different, which is totally different from what we had from Liberation Day, where he just officially said, all right, we're going to delay the reciprocal tariffs and we're basically going to be done with it. And we fell 30%, which is why we started rallying 30%. We have only fallen 7-8%. So the idea that we have some massive rally to the upside, which would rip the face off everyone's covered calls, maybe that happens. And quite frankly, I'd be happy if that happens because you just roll out of those calls and at least you're in a bull market again. But until that does, some level of protection is not the worst idea. Gold right there down 4%. Gold is not your safe haven. Silver down 8%. That is not your safe haven either. For those that are asking, why is oil up? The extent of the message coming from Trump yesterday was that they will continue the bombing, and if a deal is not achieved, then they will attack the energy infrastructure of Iran. It's not something new. Notice what I'm saying. If you've been watching the show for the past couple of days, we've reported on this already. He's already like the ironic thing about what happened last night is everything he said was everything he said over the past 48 hours in tweets and interviews and press conferences. It was almost like nothing was new. The problem was he said it on primetime television. And by saying it on primetime television and making it so explicit, that obviously was not the best thing for the equity markets. Last thing right here before we get into the market open, the Speaker of the Parliament of Iran put out a letter today and claimed that 7 million Iranians have declared they're ready to join the war against the U.S. and Israel. The quote was, "You come for our home, you are going to meet the whole family, locked, loaded, and standing tall. Bring it on." Which also is not something the market really wants to hear because it is, once again, an escalation of war. And that escalation means oil prices continue to go up. Oil prices continue to go up. Things continue to get ugly. Let's see in the next 20 seconds. Maybe things change. Maybe this is enough selling pressure. Maybe we get a little bit of a dead cat bounce, or maybe we just continue having the bottom fall out as the market continues to figure out that oil prices just aren't going down enough and that this war, unfortunately, is not ending anytime soon. Thursday, April 2nd, 9:30 a.m. Thank you, everybody, for being here. The stock market is now open. All right, wake your asses up. Let's get into it. Tesla goes down 4.04%. 4.04% on Tesla. Deliveries came in at 358 versus 372,000. And that's why that stock is getting hit at the moment. S&P, a little bit of a green candle. It was down 1.5. Now it's down 1.27. Let's see if we get any level of green momentum coming in right here. 640, 670 on the S&P. Rocket Lab down 3%. ASTS down 3%. Palantir down 2.5. D-Wave down 3.4. Microsoft 366. That one continues to go down. Microsoft is not at the lows of the year, but it is very close to it. And the 360s. Adobe, that is red. IGV software down 1.3%. Visa's down 0.3%. Micron down 6%. Micron had almost a 7.8% rally yesterday as that one continues to go down. Oracle down 1.5. Nebius down 3.5. CoreWeave down 2.9. Iren down 3.95. Duolingo is down. Oscar is down 3. Lemonade is down 4. Biotechs are down 2%. The Qs are down 1.6% as well today. SoFi down 3.17. Blue Owl is down 5.74. We are seeing some level of green relative to the pre-market lows. NVIDIA was at 170. Now NVIDIA is at 172.90. So you're seeing a bit of a reversal or retracement. So the early minute action of the market open is obviously the market buying equities. The question is going to be, is that enough to turn green, or is that also a head fake? And is that a little bit more of the algos going back and forth, kind of protecting some of those key levels, but not really necessarily enough to go green? S&P 647 up from 644. We break above 650. I think the market would get a little bit more excited. Maybe people start actually thinking that the market is kind of fading the Trump announcement. But as of now, we're still down 1.5%. That's $1 trillion on the S&P, probably not faded yet. CoreWeave, that's down 3.5%. You got Palo Alto, that's down 1.42%. You have Space, Virgin Galactic, that's down 4% as well, as we are seeing a little bit more pain. Netflix is green. Netflix is not green. It's 30 cents from green. I think it touched green for a little bit. The reason Netflix is green is because the documentaries they're going to be able to make on everything going on right now probably is going to lead to millions of more subscribers. So I would imagine that is why Netflix is green. This is great content for them to be able to document one day. Intel, is that up? Intel, green candle, but not green yet. A lot of these names are seeing green candles, but they're not actually going green, which is better than staying red, but it's not necessarily similar to what we've seen over the past couple of days. Robinhood, 66.50, still down 5%. Robinhood got a couple of price targets slashed today. The March data, again, we talked about it yesterday, just wasn't that good. Unfortunately, it looks like growth is going to be slowing down for Hood going into Q1. And, unless we have a bullish market where retail wants to trade and Bitcoin starts to gain more momentum, Bitcoin below 66, still 65.9. That is not the best for their overall earnings growth. Micron down 6% now. Some of those green candles are fading. Nebius down 3%. ARM is down 4%, even though ARM was at 160. Dell is green. Are we green on Dell? Dell is green. Interesting. What are the semis that are green? Netflix, again, just went green. Dell went green. Dell is the only semi that is green. AMD's down, SMCI, Intel, ASML, Broadcom. Broadcom was at 292 on Monday. So again, 305. We have some ways to go before we get there again. All the semis are red except Dell. Amazon 205, nasty 2.3% decline right there. The Max 7, Apple's down, Microsoft's down, Meta's down, Googs is down. Nvidia is the closest to going green that we see right here, 173.50. Tesla on those really bad delivery numbers, along with the bad energy numbers, that one continues to go down. But again, I think Tesla's going down more so based on macro. I don't think delivery stuff is that effective to change sentiment on Tesla anymore. It's just the numbers were not the best. But Tesla right there, down 3.7. Would not surprise me if we reclaim 370 here. But Tesla is sold off the worst out of the Max 7. Microsoft down 1%. Apple now down 1.26. VG, did that sell off? VG is selling off a little bit. Still up 4% on the day. ELF, my goodness, down another 5%. Where's Nike? Nike's down another 3%. Nike's now back to 2014 levels. Nike, ELF, and then Adobe, 239. That one continues to go down. Oxy's up 5%. It should be oil and gas. There you go. Buffett owns a lot of this one. And this one has worked out. AAOI, Photonics play. This one's up a little bit, 87.57. A bit green. Where is oil? Are we still at 113? 113.50, folks. 113.50. Yuck. That is not good. Grab is down 2%. The fuel prices that are rising are not good for developing parts of the world, like the Philippines, Indonesia, etc. So I would expect that to be a massive headwind for Grab, Sea Limited, etc. All these different international stocks. And Nubank right there, that's down 3%. That's getting hit. SoFi is getting close to losing $15. BMNR is getting hit, down 6.3%. Obviously, Ethereum and Bitcoin not doing the best. ETH right there, down 1.7%. And you're continuing to see more and more red right here as that goes down. When does Nike become a buy? You know, I think people have already started nibbling at this. The problem is I feel like it's a brand issue more than anything. There's definitely a bull case you can paint for Nike at these levels, but not only is the brand, I think, leading to the lack of sales guidance that the street was expecting, but dude, it trades at a 29 PE. Who's paying a 29 times price to earnings for Nike? That's not even growing. That's declining earnings growth by 35% year over year, at least as per the recent quarter. And not taking a shot on Meta growing 30%, trading at an 18 times forward PE. Like it's just like, in what world do you buy Nike over a myriad of stocks that are growing way faster and that are significantly cheaper? Like it is hard to justify it right here. SoFi loses 15. Loses 15, 14.99. Crude is still at, are we still at 113? Yep, we are still at 113. That's moving up. Nubank down 3.39%. SMH is down 3%. MasterCard's flat. Zeta is down 3%. Copper is down 5%. The Robinhood Ventures Fund is down 3.4%. Where is this VCX thing? That is down 6% on the day. For the private market, SanDisk down another 6%. This thing was almost 720 yesterday. I mean, this is becoming a bit uglier. Where's the S&P? Are we? No, it's getting worse. Look at that. Look at what the market does to us. We opened at 643, gapped up to 647.47, and now we're right back down to 646. If we revisit 643, then any of that first 5-minute momentum that saw green candles, it was nonsense. It wasn't real. It was a mirage. It was fake. it was all fake. And this is a story that we've seen so many times in February and March, and it's unfortunately continuing in the month of April. The average 5-year return for the month of April, or the average return for the month of April in the past 5 years for the S&P, negative 1.3%. Now, over the past 50 years, it's like positive 1.1, but the past 5 years, and I think last year might have skewed it a bit heavy because we went down for Liberation Day, it is negative. So unfortunately, historical data is not really on our side for April. in the last 5 years being the best. Even NVIDIA got that candle up to 173.75, right back down to 172. Right back down to 172. Rocket Lab is holding up. Rocket Lab right there, actually relatively green on the day. I think that is because of this SpaceX IPO that's coming up. So I tweeted about this last night, and I did not know how passionate people would be on this, but people had some very strong opinions. Just to give you guys a gauge of how retail's thinking about this. This post got 1 million views, and it was a very simple argument. Meta's doing 200 billion in revenue, currently at 1.45 trillion. SpaceX is doing 15 billion, targeting 1.75 trillion. Who's buying the SpaceX IPO? I would say 80% of the comments were, there's no way in hell I'm buying the SpaceX IPO. There's just no way. And maybe you go counter to how retail was commenting under my post and say, okay, if everyone in retail hates buying it, then maybe it's a buy. Maybe that's the route you go. But yeah, I think there were a lot of people that found out for the first time that SpaceX is only doing 15 billion in revenue, and a company like Meta, and take your pick of the litter, we could have replaced that with NVIDIA, we could replace it with so many names, is doing a lot more, like more than 20 times that revenue, and is trading at a lower valuation. S&P 645.20, right back to where we were when the pre-market started, a little bit above where we were when the pre-market started. We are still down. We are still down pretty heavily. So that pump up to 647, that one green candle we got, just was not enough, apparently, to, at least in the short term, get this thing to move. 645.70 on the S&P. And it is what it is. It is what it is. Nubank's down 3%. Adobe's down. Elf is still down. Amazon's still down 2.29. Again, it's going to be hard for SpaceX and some of these companies to go public in this macro environment. It's just not easy. Palantir 140.8. ASTS down 2.4. Anthropic and OpenAI, they put up some crazy stats. You know, OpenAI is doing $2 billion of revenue a month, 910 million weekly actives, 50 million subscribers, just all of those things. It kind of doesn't matter if oil is pumping. Oil is more important than every stat a tech company could put out that's bullish, because it's oil. Oil controls everything, including the ability for them to build more data centers. Micron down 7%. Iran down 8%. Is Trump talking today? I think Trump, yes, he will be. I don't know if he's going to be talking, but he's signing executive orders at 2 p.m. Eastern. So he might be talking during that time as well and answering questions. But he will be signing more executive orders. Novo, that's down. You're seeing a 2% decline after Lilly put out their pill, or just gave updates on their oral GLP-1s. 952 right there on Lilly. IRGC Navy announced retaliatory strikes, warning that escalation will widen our target bank and accelerate America's regional expulsion. So that is in response to the attack of the former Iranian foreign minister's wife, who was killed today in a U.S.-Israeli strike, allegedly, based on the headlines of this morning. It looks like the IRGC is announcing retaliatory strikes, just like they announced that they would start targeting American tech companies yesterday. I mean, obviously, that just increases the potential of escalation, right? That is the problem. That is the problem. Like, over the past 2 days, you thought the escalation was slowing down, which is why the market priced it in and we started going green. And as of last night, that's just not what we saw. Even if Trump was like bluffing about everything he said, the fact that he said it to the entire country is where, you know, I think we're seeing a bit more red. Bloomberg on how Trump is thinking of the midterms right now. 3 points. President Donald Trump is preparing to release a fiscal year 2027 budget that will frame his party's midterm election message around a massive defense buildup, partially paid for by cuts to domestic agencies and healthcare entitlements. Trump's budget proposal is expected to give an update on 10-year deficit projections and will be the first time he puts his second-term governing agenda into one comprehensive document with the numbers to back it up. The budget plan may face resistance from within his own party and from Democrats, who have made affordability the watchword of their campaign to retake one or both houses of Congress in November. So you can already get some angles on how Trump is thinking of the midterms, and if he's framing it in the context of defense and potentially increasing the defense budget, then that is counter to the narrative of affordability, which has been kind of the prevailing narrative. We have Mamdani, who won New York City off the entire premise that the city is not affordable. I wonder going into the midterms if Trump goes for, USA, we need a big military versus affordability. I wonder which talking point ends up winning, especially if either the war is continuing or there is no real justification for why the war happened in the first place. And that obviously will have major implications for the stock market. If the Democrats were to take over 1 or 2 houses in Congress, it would potentially make Trump a lame duck president for the last 2 years. So I guess in November, we'll have a better understanding of what ends up playing out. SoFi, are we still at 15? Just below 15, 14.99. Nike still down 2%. Nvidia 171.94, a little bit of a green candle, but still down. S&P 645.71. 645.71. Mick, can you please pump the market? I wish I could. I really wish I could. I thought Trump was going to not at least pump it, but at least not dump it yesterday by just saying the same stuff that he's been saying. It's just the way he said it. Yeah, sometimes it's how you say it versus what you say. And what he said was no different than what he's been saying, but the way he said it was the market basically thinking, oh, we don't trust this guy. We don't trust this guy. Democrats are now in the lead to take the Senate as per Polymarket. Yeah, multiple polls have, and the problem with bringing up polls is like polls have become so polarizing in this country because no one believes them. So if I show a poll that says, oh, Trump's approval ratings are low, everyone's like, oh, well, that's a bias poll. And if I saw a poll saying, well, Trump is like, everyone loves this war, everyone's like, that's a bias. So like at this point, the polls are just, you can't even use the polls to make an argument. But the betting markets where real money is there is a little bit better than the quote unquote biased nature of the polls. And the betting markets are saying the Democrats are going to win. Now it's early. We got a long time until the midterms, but yes, as of now, betting markets are not on the side of Republicans keeping it at these levels. Is this the 6th consecutive Thursday we are red? Yes, this is the 6th consecutive Thursday. I saw that stat yesterday. We have had 5 Thursdays in a row that have been ugly. Thursday's just not been a good day this year for the markets. S&P down 1.3. And this is the next Thursday. That is red. Blue Owl shares down 7.6. Redemptions are hitting. Redemptions are indeed hitting. Blue Owl is paying an 11% dividend to get you to buy the stock. An 11% divvy. Yeah, it's technically Friday for the market. That's correct. That's another thing. People might start selling because they don't want to be part of the overnight weekend events that might happen Friday, Saturday, Sunday, because the markets are indeed closed tomorrow. BMNR is still down. Nubank still down. Adobe still down. Oklo down. Bill Ackman is down 20% on the year. If you looked at his latest report, he is not in Nike. If he was in Nike, it would be worse. But he is in Hilton and Chipotle and Meta and Google and Amazon, and all of those names have not worked. Bill Ackman manages 20. If you're down this year, please do not feel bad about yourself. Bill Ackman manages $20 billion, thinks that Bill Ackman knows how to give them a return. $20 billion worth of capital thinks this one guy can give them a return. And I think Bill Ackman is a legendary investor. There's no hate coming from my side. It's just like, if that much money is centralized towards one guy who is down 20% this year, as a retail investor, you cannot feel bad if you're managing $20,000 and you're down this year. So it's just important to remember when the market goes down, even the best of the best are not able to manage and navigate and hedge this situation, or I should say monitor the situation in order for them to have a positive return year to date. Negative 20% is considered green in this market. Yeah. To be honest, some of the investors might be happy that it's only that negative 20. Are we seeing green candles? At this point, dude, it's just exhausting. Yes, we're seeing a couple green candles, but it's like, do you trust any of it? Like now that we went through what we went through over the past 3 days, where Monday was a theoretical bottom, and then Tuesday, Wednesday, we pumped hard 4%. And now we're down 1.5%. It's like any green candles you take with a grain of salt. What else can you do? What else can you do? It's all relative. That's not his money, but many retail that 20,000 could be their whole net worth. No, that's fair. Obviously, he's managing professional money, but the point is, in managing professional money as a professional, if you can't generate a return, then it's not that different from a retail investor managing their own money that also can't generate a return. Like, in fact, it should be different. The professional should be able to be way better because they're a professional, supposedly. But Meta is Meta. Whether you own Meta on your Robinhood account or you own it in a prime brokerage at Pershing Square, if Meta goes down and someone bought it at 625, which is what I think Bill Ackman's average is, then at 563, you were sitting on a loss. You were sitting on a current loss. And that is happening across the entire equity market. SoFi right there, back above 15. Rocket Lab, 65. Rocket Lab, I think this pump is literally because of SpaceX. You would think a growth stock like Rocket Lab would be getting hit way worse than this. SpaceX is like quite literally saving the space industry. Also, there was an update that Amazon is looking to buy GSAT, Globalstar. That's why Globalstar is up 11.2% right here. As Amazon potentially, I think Amazon's looking like 15 billion is the acquisition price potentially. That came out after hours. Sorry. There's no number. It's just there's no price on it. Amazon is in talks to buy GSAT as per the Financial Times, but there's no, I would imagine they have to pay a premium on this. It's worth $9 billion. So I would imagine around that $12 to $15 billion range is what they would pay. Because if not, then shareholders aren't really getting that much of a premium. GSAT year to date is up 18% now with the 10% move. Before that, it was up 8%. Before that, it's up 8%. UNH goes green. UNH 273 on the day. The Trump administration has prepared an order that would impose 100% tariff on some imports of patented medications and their active ingredients. Okay. I guess we are back to the tariff headlines as well. I don't know how easily Trump can do these tariffs now that the Supreme Court has ruled them illegal, but I guess they're going to use different sections. War, tariffs. What else do we need right now? What else do we freaking need? Crude's at 113 still. Oil's up. Did Trump just tweet about Bruce Springsteen? Bad and very boring singer Bruce Springsteen, who looks like a dried up prune who has suffered greatly from the work of a really bad plastic surgeon, has long had a horrible and incurable case of Trump derangement syndrome, sometimes referred to as TDS. The guy is a total loser who spews hate against the president who won a landslide election, including the popular vote, all 7 swing states, and 86% of counties across the country. Under Sleepy Joe and the Democrats, our country was dead, and now we have the hottest country by far anywhere in the world. MAGA should boycott his overpriced concerts, which suck. Save your hard-earned money. America is back. Well, I think with living in this market and navigating it, the best thing that all of us can do is try to live on a prayer. I think that's, that's probably, that might be the only way to survive what we're doing right now. We might have to live on a prayer. S&P still red. S&P still red. Is that Bon Jovi? Oh, fuck. Damn it. Wait, I thought that was... No way. No, that's... Dude, I thought I crushed that. I need the soundboard. I was gonna click it and have the applause. Like I thought that was Bruce Springsteen. It's Bon Jovi? Oh, you guys are right. 1986, Bon Jovi. Dude, I'm from New Jersey too. That's not the best. I swear on my life, I thought it was Bruce Springsteen, dude. I thought Bruce Springsteen is the guy who does the freaking living on a prayer. Like, literally, I was thinking of that joke as I was reading this tweet. I was like, okay, I have a good punchline for this. Well, dude, why is he going after Bruce Springsteen in the middle of a war? Like, this is just weird. Like, I get it. You don't like the guy, but goodness, he's boycott his concert. Like, it's almost like he has a grudge against this guy. That's, well, in the middle of a war, I guess Bruce Springsteen has a really bad plastic surgeon, as per President Trump. Meta right there, 568. Not really getting some green, but trying. Nebius is not close. Well, no, it's very close to green. Almost at 102. 101.82 right now. But it is trying. I really thought it was Bruce Springsteen doing Bon Jovi. Okay, well, I'm never going to forget that now. Not after being embarrassed that publicly. SoFi back above 15. Rocket Lab going green. Wow. The space race is on. The space race is, it's just not stopping. Look at that. That's a big candle, 61 to 67. If you went short this morning on Rocket Lab, didn't work. Didn't freaking work. Intel goes green, Netflix goes green, Tesla's still down 367, Nvidia trying to get back to 173, Palantir 143. All right, so you're getting a string of green candles coming in. Planet Labs up 10%. S&P at 648. Could we get to 650? Could we actually break some of this red and go green today? Is it possible? Planet Labs up 9, Satellogics up 10. OPEC is likely to weigh further oil output quota hike at meeting on a Sunday to prepare for any easing of Hormuz export constraints. Okay, that's probably your headline. So OPEC thinking of increasing output. That's likely your headline. Crude should be down. Crude is down, 112.50. Not down a lot, but it is down. I don't know if that's enough, though. Just because OPEC is producing more, how much could they possibly be producing and have the capacity produced to overcome the lack of oil going through the strait? The VIX, where's the VIX? Let's see. Dude, I really thought it was Bruce Springsteen. I did not think it was freaking Bon Jovi. VIX is up 7%. It was up 11. It was up 11. Yeah, I don't know. I don't know if that's enough. I mean, OPEC producing more oil. Like, the problem is this market is so unbelievably headline driven. That one little thing is like, oh, cool, pump. And then we'll get something later. Oh, cool, dump. Like, again, nothing Trump said last night was new. Absolutely nothing. But the fact that he said it in the way that he did caused the market to dump, which is laughable that that's how quick we react. But it's also hard to trust it when it goes super green or super red. Nike is still down 3%. Ondas back to 874. This was pushing $9 yesterday. Who in OPEC can produce more? I'm not sure. I would imagine, I mean, off the top of my head, I would imagine the Saudis. But then again, the refineries have been hit so hard that how could it be the Saudis? Kuwait's in trouble as well. Like, and I remember producing more oil, you have to store it somewhere. And if you can't get the oil through the strait and there's not enough space to store it, then you can't produce it. So when they say the increasing of output, like, okay, how and logistically, when can they actually produce it at the level that would meaningfully reduce oil prices? Nebius 101.79, S&P 649. Can we see 650? Can we see 650 here? Do we get any macro data at 10 o'clock? Let's see. We already had the jobless claims and the Challenger layoffs. No. Or you shouldn't be getting anything. We have some Fed talk, but that's it. So we shouldn't be getting any more macro data to affect this. Who bombed the guy that Trump was negotiating with? It seems like it was a joint U.S.-Israeli attack. That is what the headline is this morning. We don't have full confirmation, but it seems like it's a joint U.S.-Israeli attack. But obviously, there's still a lot of questions. There's also questions on if this guy is even alive. There's questions on how they attack. I mean, some people are saying Iran themselves had a failed missile again. Like, there's just so many different ways for us to try to dissect it. The point is, it's escalation regardless. Nebia's going green, and that escalation is not good. S&P, she's trying for 650. She is trying. The former foreign ministry official is the person whose wife got killed today, as per reports, and he's seriously injured. And that is being reported as a U.S.-Israeli strike as of this morning. Sellers are exhausted. Maybe. I mean, or maybe it's a pump fake. If we break 650, then I'd be very curious to see where sentiment is and what people think. 78% of you said this red gets worse. So about 80% of people here said this red gets worse. So far, this red is not getting worse, at least not in the first 30 minutes of the market opening. This red is getting better. And so maybe this changes. This is the heat map for the day. Obviously, still red right here. Consumer defensives are green. Energy is green. Obviously, tech software is red. Okay, let's ask the poll if people are saying it. Is this a bull trap? We haven't even really flipped green on the day, so it's hard to say this is a full-on like green bull trap, but I don't know. We were down 1.5. Now we're only down 0.8. That's a 50% recovery from the bottom. We were down 10. Now we're only down 5 points. Is that a bull trap? Is that a bull trap? Or is that seller exhaustion? Over what time frame? Today. It's always today. It's always a daily time frame. Because we're analyzing, obviously, if I go 10 years out, it's not a bull trap probably if the American economy doesn't collapse. But this is always intraday. Do we think we can either hold these lows or hold these gains? Air test systems up 3%. 650 S&P. That would be very nice to see. As Jason said, we needed to hold above 652 to even have a shot for that sort of 48 hours of glory thesis to jump us up to 670. We have failed to hold above 652. Maybe we recapture it today, but today was the day to kind of get there. As soon as we tanked last night in the futures, that's when the thesis ended up not playing out. Although we closed above 650. We closed at 655 yesterday, so it was kind of on track for today to be the day. And then you just had a really tough speech by Trump that the markets were not ready to interpret. Tesla down 4.5%. Tesla down 4.5% here. The pump is exit liquidity for the weekend. I don't blame anyone for thinking that. I don't blame anyone for thinking that. Can we look at IRDM? I've heard of this name. Year to date, it's up 78%. Yeah, this is, correct me if I'm wrong, but this is in the same world as GSAT when it comes to satellite communications. I might be slightly off on that. But whether it's a Rocket Lab, an ASTS, an IRDM, a GSAT, a Lunar, I mean, a lot of these names have just had a really good year, even if it's based on the idea of SpaceX kind of pumping the entire market and for space in general. I mean, again, a lot of people just might be thinking of these names as proxies towards space and SpaceX. And again, SpaceX has an unbelievable TAM to go after, which is if you justify the valuation via TAM, then yeah, they have one of the best TAMs in the entire market. But I mean, if you're buying a stock at $2 trillion and you're trying to outperform the market, you're not looking for it to go to 2.2 trillion. You're looking for a serious return, at least over the long term. And, that is the broader question around SpaceX. But if Rocket Lab at 30, 40 billion, yeah, people will pile into that if that's their way to get exposure. Iran right there, still down 4% on the day. SPY losing 649. Once again, we touched 650 for a literal second. And now we're losing it. Ugly, ugly, ugly. Ugly, ugly. Rocklab also has a big TAM. Yeah. I mean, one could argue their TAM is a mini version of SpaceX's TAM, which is why they are, being seen as the proxy. Planet Labs up 10%. They had a great earnings a couple weeks ago. Where is oil? 111. All right, so it's still coming down, which is good. 111 on oil. VIX is coming down as well. I don't know, man. $11 on oil is a lot. That's not a joke. Like the fact that the S&P is even holding above 645 right here with an $11 increase on crude is kind of unbelievable. And maybe it is that thesis that sellers are exhausted, or it's fake. But it is ugly. Yesterday, people bought $1 billion of the short oil ETF, which is not doing well today. Yesterday was the day people were like, all right, or sorry, I should say March of 2026. So the last we got this data yesterday, but last month is when people piled into oil shorts. The ticker of this is SCO, which is the largest it's seen since 2008. And, now you're starting to see a lot more excitement, and the oil markets continue to go up. Yeah, it's a glitch on oil. That's all that's happening. It's a glitch on oil. Nebius right there, 102.95, as that is still trying to hold up right here. It's ugly. It's ugly, ugly, ugly. Corning, we're still moving up. GLW, a little bit of green right there. SPY, 649.35. She's trying. Meta, 567. Amazon, 208. I mean, you're not really seeing any broader momentum here. Tesla, once again, deliveries came in at 358 versus 372, 364 right there on Tesla for the stock price. Energy is the real story. I still don't get how energy decreased year over year. Like, I'd be very curious for someone to explain how. But, and I get the tax credits, the rebates, et cetera, but still, the pure core energy business, which was growing very nicely, it's the first quarter they're not showing the growth anymore. I think that's why you're seeing a little bit more pain. Let's get a little bit more coverage here on Trump from last night as well.
Trump signaled last night that he believes it's not his problem to deal with. The UK today hosting diplomats from more than 40 countries in a virtual summit on the crucial waterway. The United States not participating in that meeting, which UK Foreign Secretary Yvette Cooper said would focus on ways to reopen the strait after Iran had hijacked it. Separately, French President Emmanuel Macron said today it would be unrealistic to use military force to open the strait, despite President Trump's suggestion last night that other countries should take it. He said any military effort to reopen the strait and get oil flowing would take forever and expose those transiting the strait to fire from Iranian troops and ballistic missiles. Now, in his address to the nation last night, President Trump argued the opposite.
Go to the strait and just take it, protect it, use it for yourselves. Iran has been essentially decimated. The hard part is done, so it should be easy. And in any event, when this conflict is over, the strait will open up naturally.
The president also said that stock prices and the cost of oil will normalize when the war ends, which he described as being 2 to 3 weeks from now. That's a time frame he laid out in public a couple of times this week, and he stuck to it in the speech last night, guys.
Eamon, appreciate that. Eamon Javers this morning and joining us with some of the news from this president's speech last night. Meantime, stocks here giving back a chunk of this week's gains, but we are off the worst levels of the morning. Joining us this morning, David Kelly, JP.
There's no the world as well as everything else that comes from the region. And the price of that is going to be that Iran is going to be able to export stuff too, because there's no other end game possible here. So I think you do have to look past that and then look towards the rest of the year. And meanwhile, I think the U.S. economy's got enough going for it to keep growing slowly from here.
But you brought in, I assume, your GDP estimates for the year?
A little bit, yeah, and part of it's obviously this oil effect. Also, the refunds aren't quite as strong as we thought they'd be so far. So taking down growth a little bit in the second quarter. But remember, we could also get some further stimulus checks. We talked about tariff rebate checks. Now the tariffs have gone or are lower than they were. But I still think we're going to get these tariff rebate checks to try to pump up the economy before the November elections.
You mean the refunds from the illegal tariffs or an actual rebate?
I think the refunds will slowly get back to the importers, but I think that Congress will pass a tariff rebate check or some other stimulus. I don't know how they're going to justify it, but they will do this, I think, over the course of the summer to make sure the economy is looking strong by the fourth quarter.
You talked about growth. What about inflation, which is once again a big debate with oil well above $100, and it doesn't seem like it's going back down anytime soon.
Not soon, but I think it's sort of 2 steps up, 3 steps down. I think by the middle of this year, by June, we could be looking at 3.5% year over year, maybe even close to 4% year over year on CPI. But by the end of the year, if we're right in oil and you've got lower tariffs the fourth quarter this year than last year, and you've got falling shelter costs, which we're seeing also, all that tells me 2% by the end of the year on CPI, and I actually think below 2% next year. In fact, next year I think we're going to be below 2% on both growth and inflation.
Oh, you're more dovish than the Fed overall.
Well, no, absolutely, because I think that this is a temporary oil issue, and I think it's a temporary tariff issue. And the end game here is this economy is really only capable of growing about 1.5% long term. So I think both of these things, both the tariffs and the oil, are going to fade over the course of the year, and we're going to just slow down as we go into 2027.
So are you not a believer in any kind of AI productivity boom, or is it just too early?
But the thing is, it has to be all AI productivity boom. Because of what's going on, the working age population is now shrinking by about 20,000 people per month. That means that all the economic growth is essentially going to have to come from AI productivity. And the productivity numbers are good. I think they will be good from AI, but there's only so much you can hope that it can do.
Why is that?
Well, it's because it takes, certainly in the near term, it's taking a while to actually roll out. We're seeing a lot of people saying they're implementing AI, but are they actually replacing workers by this? I think it just takes a while for those genuine productivity improvements to occur. What's happening right now is we're getting good productivity gains, but it's because we've got such low job growth that basically workers are having to do the job of 2 or 3 people. I don't really think they're being helped by AI that much yet. Eventually, I think they will.
And you don't. I mean, a tariff rebate check. I don't. That's similar to the $2,000 stimmies that Trump was talking about. I don't know if we're getting those, especially when we have to pay back $170 billion of tariff revenue soon. 650 S&P. I do agree with him, though. There's probably going to be something they try to do to stimulate the economy by the end of Q4 to make the argument that, the economy is doing well. But then again, what could they possibly do there? And where are they going to get the money from? By the way, we're getting some option flow. Someone just bought a couple $1 million of DTE QQQ puts. So that's expiring puts today. 578 is what you have right there on the Qs, down 1%. They've got it at 575 on the strike for these Qs, or for the NASDAQ. And you're seeing a little bit more pain. Also, you got a headline, which is also kind of crazy. Someone loaded QQQ calls an hour before the news of the possible Iran peace deal. That was up 300%. This was 2 days ago. And then today, the same person loads millions worth of DTE QQQ puts, which are now up 200%. 1 day later, so yesterday they bought those puts. Today, they're up 200%. I mean, I don't know if there's going to be an investigation, but the level of manipulation that's probably happening in this market based on someone who knows someone else that, just has a gut feeling, or maybe gets a little bit of insight from someone who's close to Trump about what's going to happen before it happens. It is very hard to convince me that that's not taking place right now. People are naturally not that good at timing stuff. Like it's usually a little bit of information kind of helps make the argument. VG right there going down, only up 1% now. On the day, ASTS, I think ASTS is up 5% with IRDM and GSAT based on the potential Amazon acquisition. So that's why that's probably getting a bid. Rock Lab as well, still up 4%. Lunar, they diluted yesterday, but Lunar's up 14% even after they raised about $650 million in secondaries. Space is holding on. Space is so far holding on. Data centers recovering, whereas Oracle close to green, but not there yet. Nebius is trying at 104. No, Nebius is actually green on the day. That's 2%. Nebius from 95 to 104. This is one of the most volatile stocks in the market. But that's also why it has the best premiums. And then CoreWeave right there, 78.87, as that's green. Still not over 650. Still not meaningfully over 650. Micron also almost recovered. It was down 7. Now it's down 3. Maybe a slight bit of reversal. There is no news, I would say, for any of these green candles. But a lot of these green candles are in specific stocks. They're not on the broader indices yet. Energy Department officials say the U.S. is not engaged in any discussions to release additional crude oil from the strategic stockpiles. I mean, this price of oil continues to stay above 110 for the next 2 weeks. I think that's going to switch. I think they're going to start releasing a lot more oil. I mean, they're quite frankly not going to have any choice. 111 on crude. Dude, this is just a mess. This whole situation is just an absolute mess. Like, it is like no one knows why it's happening, how it happened. The communication of it has been contradicting on every level. And forget the stock market going down. Like, yeah, that's annoying. Obviously, that's annoying for everybody. But oil getting to these levels is just, it was at $60 in January. Like, we had a lot of other issues to worry about in regards to the labor market, AI, earnings, some potential inflation. Now it's just like, this is absolutely a mess. And the only thing to stop this is for us to leave the region and claim our victory and start potentially trying to get this thing to go back to normal. And until then, you're just asking yourself, all right, I guess we're stuck in the middle of this and we don't know when it's going to stop. S&P 650 now. You're getting a little bit of a break above it. Tesla's still down 4. How come the VIX is down? It looks like oil's coming down a little bit. So the VIX is starting to come down a bit as well, 6.68%. Admit Larry Goldberg is shitting you on X. I saw his post. I just, there's some posts you just laugh about. There's not much to do other than laugh. I saw his post right before I went live. There's nothing to even respond to. This is his post. You guys can be the judge of if he's shitting on me. I said SpaceX is filed for an IPO. SpaceX does $15 billion. They have a $1.75 trillion valuation. Meta does $200 billion, $1.45 trillion valuation. Are you buying the SpaceX IPO? Like, talk about being neutral. talk about not giving your opinion on anything other than just presenting the stats and asking a simple question. This Tesla Larry guy, idiot comment of the year. Revenue does not equal valuation. We'll hear a lot more from other idiots on this subject in the next 6 months. Fine. If you believe them, don't invest. Your choice. There's some people you can't respond to, dude. Like, there's like, it's just like, okay, presenting the stats. Like, this goes back to the Tesla cult. Sometimes you present the facts and revenue does not equal valuation. It's like, no shit, revenue does not equal the valuation. But there is something called a price to sales multiple. And SpaceX trades at 120 times price to sales. And the worst part about this whole comment is my post didn't even insinuate that SpaceX is overvalued. It merely showed the stats of it relative to a company like Meta and then asked the simple question. But if that's enough to trigger people, I mean, again, that's why Elon gets the Elon premium, because he has people like this Tesla Larry guy that are, they'll cut off their left nut to make sure that they can buy SpaceX stock. And as a result, they don't really care about the valuation. They just want to buy it. So that's what you got. 650.30 on the S&P. Planet Labs, that's up 10. Meta's, that's down 1.2. Amazon recovering a little bit. Amazon trying to go green. Amazon trying to go green. What about Palantir? Again, every time you bring up Palantir, when we talk about valuation, it is a mute point. Palantir did not IPO at a $1.75 trillion valuation. And I have said over and over, Palantir has an expensive valuation. You're not getting me to say Palantir is absurdly cheap. But when it fell to $6 and we started covering it very deeply every single day, that was the time to really do the analysis on it. So you can complain about Palantir's valuation as well. You can complain about Rocket Lab's valuation. But the point is, these companies did not IPO. Like when you buy a stock, you're expecting some upside from it. And Palantir IPO'd at a $20 billion valuation. Today, the company's worth $350 billion. The company could fall in half and it would still be an amazing return from IPO. SpaceX is IPOing at $1.75 trillion. Palantir will do half the amount of revenue that SpaceX does this year. Palantir will do $7.5 billion. SpaceX is doing 15. So I just don't get the argument when people bring up, what about Palantir? It's like, well, what about it? And Palantir is growing 70%, by the way. They're growing into the valuation, even if you disagree with the valuation. But that has nothing to do with the actual relevance of the IPO from SpaceX. I said moot, okay? I said M-O-O-T, not M-U-T-E. It was moot. You guys just heard it wrong. You heard mute. It was moot, all right? Replay the clip. We made that mistake a month ago. I learned from that mistake. I know it's moot, not mute. So even if it sounded like mute, the intent of what I meant to say, even if you didn't hear it, was moot. We're not going to make two mistakes in a row, all right? You said mute. I feel like I said moot. It's just my U's sound like O's. That's the difference. Dude, I really thought freaking Springsteen made Living on a Prayer. I thought that was such a good bar after I said that. I really thought I killed that shit. There's some moments in the stream where you kill it. You have a good moment. You have a good 30 seconds. You're like, man, that was a good, I want to re-listen to that. I thought that was going to be my moment for today. And apparently it's Bon Jovi. I'm from Jersey. I should know this. I should know this about Springsteen. 650.7 S&P, 650.9, 651. High of day. High of day S&P, 651. 651. Can we hold it now? Oil is still at 110 though, dude. Oil's not coming down. That's the weird part about this. Oil's at 111. The fact that we're actually recovering a little bit with oil up this much. I mean, it's either fake or it's either, once again, sellers don't have enough selling pressure left and money needs to be deployed. We'll get an update on money market funds. It decreased by 30 billion last week. Still 7.8 trillion on the sidelines. 70% of you said this is a bull trap. 70% of you said this is a bull trap. This makes zero sense. I agree. None of this shit makes sense, bro. None of it. It is, if we're going to go red, let's go red. And if we're going to go green, let's stay green. But this is, look at NVIDIA. It's about to break green for the day. This thing was almost under 170 in the overnight markets. There's been a couple studies that have been done over the past few months that buying the 8 p.m. overnight market prices and selling the 9:30 open, or give it 30 minutes, 10 a.m. open, has actually started to do really well. Like for some reason, I've actually had a couple trades myself where like you buy it around 8, 9 p.m., you sell it at the open, because the open, it like finishes the pump before it dumps. And then the overnight markets is where a lot of the gains are, is like where the lows are. And it's like worked. And I don't know what it is about. Maybe it's just low liquidity, so the price goes the opposite direction when the market opens versus at the overnight market. So whether you're long or short, you get to benefit from the delta in between the two prices. Gold and silver still down, but it is weird how that happens. Micron still down 2.4. Still down 2.4. It's not 1030 yet. It's still not a 1030 slam. Amit, do you think it's just a correction from the overreaction of last night? You know, I'm happy you asked that question. I do think Steve and I, when Trump was done talking, our first comment was like, we thought it could have been worse. And we're not talking about price action. We thought Trump could have said something that really genuinely would have made things worse. And the reason we felt that is because nothing, like literally, I cover this very deeply. Every little word that Trump says, I cover. So when I'm hearing the whole speech, I'm like, okay, nothing. Even the cringe moments, nothing was new from over the past 2 days. So then when I wake up and I see the market's down almost 2%, I'm like, okay, it does feel a little bit, I can understand why. I get it. Market's upset about oil prices. Market's upset about bombing car guy. Like, I get it. It's the same reasons they were upset last week. But it's not like it's a brand new piece of information. So it did feel a little aggressive. But then again, is this rebound even reasonable enough to imagine is true when oil has not really declined? I mean, maybe the market reaction was a bit too aggressive, but if oil's up 11% on the, until oil goes down 11%, I don't think it's easy to believe this. Which is why you have so much back and forth. He wants to end the war, not escalate. I agree. And that's also why yesterday's talk was confusing, because when he started saying escalatory things, the market started, getting upset. But then again, if the market's calling BS on any of the stuff he said that was interpreted as escalation, then that's why you would buy stocks. That's why you would go green. That's why you would be like, all right, well, I don't think it's actually going to escalate. But the fear of him actually bombing the energy infrastructure, which there has to be a natural Trump put there, because if he bombs the energy infrastructure, oil goes to the moon, literally. And forget stocks going down, just affordability for the average American goes through the roof as well. Like you kind of would imagine, unless they have a ground invasion and literally take over the island and take control of the oil, which I would imagine would be met with a lot of resistance. So like the idea of them even doing that to me it's hard. It's hard to imagine that would be taking place. This is what we're dealing with. Tess says, Amit, I watch your stream while working. My kids say, do you really work? You can tell your kids that constantly being emotionally distraught with multiple different perspectives and seeing red go to green and green go to red is a form of labor. And it is an emotionally exhausting form of labor. I lay bricks. Yes, exactly. Isn't today the first anniversary of Liberation Day? Yes, April 2nd. This was the day that Trump came out with the board and showed off a bunch of different reciprocal tariffs. Gold and silver still down. Qualcomm are we up? Silver's down 5. Gold is down 2.5. A little recovery from the 4% decline it was in the pre-market. Qualcomm is down 2.4. Rocket Lab fading a bit of the highs, but still green. Nebius 105, that's up 3.2. So that one's had a really good recovery. And then SPY with the green candles at 650. 650. I think shorts realize sooner or later Don is going to finish this war and it's going to rip. With him, it could be any moment. Well, that's what we felt for the past 2 days, right? And then last night, it was just interpreted as that's not happening, even though, once again, he did not say something that's different. It's just, I think even Trump was probably pissed after he was done with the speech and saw the oil futures up, because maybe he thought he would have calmed it down, but that ended up not happening. Visa said 53% of U.S. businesses surveyed would let AI agents negotiate prices or terms directly with other AI on their behalf. The study also found 77% of business leaders are already using AI. Okay. That's well, Visa. I hope that analysis can get this stock to flip green. $2.99. At least it's a little green today. Visa and MasterCard both in a 10-15% drawdown as well. Why aren't electric car stocks going up with oil so high? Well, I think most of those are still high beta, right? Like your Neos and Teslas of the world. So oil prices going up isn't going to be the only catalyst. Also, like, I don't know if we see a lot of people pile into buying a Tesla, especially with the rebate gone, which is one of the reasons I bought my Tesla and my dad a Tesla, is because we got that $7,500 rebate, just because oil goes up. I mean, Teslas are still relatively expensive. So the idea that people would just switch because they don't want to pay an extra dollar for gas, like, I don't think that makes a lot of sense. Like, people are going to wait a lot longer. And we saw it in the delivery numbers today with Tesla before they make that decision. So, yeah, I mean, maybe, but Teslas without the subsidies, dude, you're like pushing 50 grand. And you should still be able to get cars at least 10, 15 grand below that, even if you have to pay more for oil. ServiceNow 101. That's down 2.6. That's down 2.6. Yeah, exactly. And then the other point we've been talking about, oil is still very important for the electric grid writ large, right? So to charge that Tesla, you still need oil in some capacity, even if it's not literally putting oil into the car. IGV still down, up a little bit. Still down. 10:30. Let's see if we get any level of reversal on this. We're obviously still pretty red. Let's finish up with JP Morgan and see what else they had to say about the market.
I don't see that adding to what you talk about a normalized growth rate of 1.5%. Why not?
Because if you go back since the start of this century, we've had about 2.2% growth, about 1.6 coming out of productivity, and about another 0.6% out of growth in employment. The problem is growth in employment is going to be a goose egg unless we change immigration policies. And so that means you're going to have all of it come from productivity. And, you can go sector by sector. It's actually a little hard to build up those productivity gains, even though I think in the real world it will change productivity in the long run.
Given your optimistic outlook on not just the conflict overseas, but AI, what does keep you up at night then, David?
Well, it's always none of the above. I think there are, we're in a world of fat tail risks. And, if you think very broadly, technology gets more and more powerful across many dimensions, and regulation is getting smaller and smaller across many dimensions. And light regulation combined with more and more powerful technologies means, things like a cyber attack or some other medical issue or some military technology. There are just so many technologies out there, or some financial technology. We're seeing a lot of, if, for example, in crypto, we're seeing much lighter regulation than probably it deserves. So overall, there's going to be some fat tail problem out there at some stage in the next few years, and that's why people have to be pretty well diversified.
All right, so all this being said,
and that's obviously also why the markets are declining here, based on that idea that inflation expectations could be higher. Folks, we do have some breaking news here from Semaphore. This is a pretty big one. The president has informed Attorney General Pam Bondi that her time is nearing an end. Formal announcement hasn't yet come, aka all the normal caveats that he could possibly change his mind apply. He's been speaking with advisors on a possible replacement in recent days, and Bondi is aware of that. Wow. Bondi is out. I wonder why. She's been loyal, bro. Like, you talk about loyal. She's been loyal. Every time they brought up Epstein, she pushed it off. Dow 50K, constantly praising Trump. I mean, she definitely has not been someone who went against Trump, at least not publicly, right? That is interesting. Because the next person he replaces her with is gonna, if that person is not as loyal as Bondi, especially when it comes to these situations around the Epstein files and things of that nature. Because again, she was like, dude, she did not budge. Every time she got put in a tough situation, she found a way to not let people think that, Trump is engaged in any criminal activity. I wonder what happened. Spy 652. Oh man, what would we need? We need 655 to flip green, folks. We need 655 to flip green. VIX is now only up 3%. We need 655 and we flip green today. I don't know if we get it. Crude is still up 10%. So that's not coming down enough. But at least it is down from 113. Wow, Bondi's out. Bondi is out. Interesting. Amit, do you think Hit Me Baby One More Time was the Spice Girls? Okay, I know that was Britney Spears. I'm not that bad. I feel like it was an honest mistake. Living on a Prayer thinking it's Bruce Springsteen versus Bon Jovi. I feel like that's an honest mistake. I really do. But I'm not that bad. I really thought it was Bruce Springsteen, dude. I really did. 652.25. 652.25. I mean, it's given back 60% of the losses. The 10-year, is that coming down? 10 years at, 4.3. 10 years almost below 4.3. That would actually be quite encouraging if the 10-year actually falls to like 4.28 and oil can get to like 105. We should see the S&P get way closer to that 660 level that we almost touched yesterday at 658. I mean, that would be kind of the first target easily to achieve there. But we just need a couple of things to happen. Yeah, crypto just went positive. There you go. Bitcoin participating now. Look at that. 66.607. That's a $700 candle on Bitcoin. Is there news on Nebius? No. Outside of that Finland thing that they, Finland data center that they're building. Nebius is just volatile, dude. This thing, you got a $15 range on it back and forth. It is objectively, and I don't mean any disrespect to the Iran and APLD and TerraWolf people, but Nebius is the winner. It's obvious. Nebius is, it's kind of obvious. Wow, S&P! Where did that come from? We went green. We went freaking green. 656. Oil just went down. Trump just had to say something. Dude. Or is that all technical? What? Okay, there is a Trump tweet. I don't know if this has to do with the market, but thank you to all of our great congressional Republicans, House Speaker Mike Johnson and Senate Leader John Thune on their work for this week. Republicans are unified and moving forward on a plan that will reload funding for our fantastic Border Patrol. I will soon sign an order to pay all the incredible employees of the Department of Homeland Security. Okay, so this has nothing to do about Iran. Wow, 657. This is about Trump just says he's going to sign a bill to get TSA back to work. Is that the reason? Is that really the reason? Please don't tell me this is fake, bro. Please don't tell me this is fake. Meta's almost green. UNH is green. The Qs are green. SPY 657.30. That is very close to the highs of yesterday, guys. We were at 643 this morning. Iran drafting protocol with Oman for Hormuz Strait traffic. Okay, so that means more ships basically coming through the strait. It seems like that's the implication of that. Iran drafting a protocol with Oman for Hormuz Strait traffic. That was kind of reported yesterday, though. That's not really... I mean, again, this market's just so narrative driven. That was absolutely reported yesterday. We talked about Iran and Oman working together on this. I guess that becoming more real is why the market's reacting to it right here. Oil is, I'm still looking at 110. We just went back red. We just went back red. Barely green now. Hormuz Strait Protocol not to constitute restrictions. Is that the same as opening up the Strait of Hormuz for every ship? Or is that, it's definitely progress, but I don't know if it's the complete opening, which is the issue. If it was the complete opening, well, technically you would see a really, I mean, you would imagine the market absolutely pumps on that, even if the war's not over, if the Strait of Hormuz is open, because that's what the market cares about. Like the US and Iran could be fighting as much as they want, just like we've constantly had wars for the past 30 years. But in this case, Iran controls the Strait. That is why markets have been so on tilt. If the Strait's open, even with the war fighting, which it doesn't make sense because if the war is still going on, why would they open the Strait? Then the market will pump. And it's almost like that run to 657.92 from 650 is the market saying, yeah, we think the Strait will be fully open, but I don't know if that's exactly the implication of the headline. Iran drafting protocol with Oman for Hormuz Strait traffic. Dude, but that's good. But what does that mean is the question. What does that mean is the question. Crude's now at 109. Yeah, that dude's 0 DTE puts are screwed at this point. The guy who loaded up on millions of Q, he had 570 on those. We're at 584. The Qs are almost green, baby. They are almost green. Maybe that headline, along with this Trump tweet about DHS funding to an extent. SPY, it's teetering on 655. As you can see, that red candle right there. They're drafting it doesn't mean it's agreed to, right? That's like a draft is not any level of serious policy that's being implemented yet. But the perception is that it will be. And that's where the market might be pricing it in. You know, honestly, bro, maybe this market is a victim of AI as all these funds are using AI to enhance their algorithms. And the algos are, because AI is probably in the infancy of like, navigating equities, even though people have been using AI for a while, but at least like the most, complex models, maybe they're just so volatile and they react to so many different variables that it becomes hard for the market to develop a trend if it's going back and forth and all these different things. I mean, quite frankly, maybe really it might just be the models aren't good enough yet to react to this stuff, and as a result, they react in a more aggressive way. Iran deputy foreign minister says Iran is drafting a protocol with Oman for Hormuz Strait traffic. The protocol will not constitute restrictions. S&P now losing 655. As that one's still going down. Well, let's see if it holds. Let's see if it holds. Let me pull up a couple things right here. Fix right now down only up 2.6. It was up 11%. Where's Palantir? Palantir's at 146. VG is at 1470, still up on the day. Tesla's still down. Tesla not really getting any recovery, 367. Corey Van Nebbe is flipping green. The data center name is flipping green. It's helping Oracle flip green. Space is still green. I mean, if we go right back down to 650, then it was a momentary jolt of excitement that once again, I mean, that was a big move though. 658 coming up from 645 in the like a huge move. I think anyone would be happy if we closed at 655 today. It's way better than 643, but man, It's a quick up and then a quick down. Quick up and a quick down. So the trade is open now? No, the trade is not open. But it looks like there's a template or a framework to potentially have the trade be open. I think. Like, there's a draft protocol with Oman and Iran as per Bloomberg. This is unbelievably confusing. Back and forth, and you just don't know. VIX is coming down pretty hard right here. Only up, it's at 24.93 now. Lunar's up 18%. Oil continuing to move up. What will be in the draft is the thing that matters. I agree. I'd rather have the market dump to 6,200 in a single day. Slow declines are held because it means you can slow rise on the other end. Yeah, I mean, a lot of people I think are just saying to rip off the Band-Aid at this point. Also, does that $2 million fee still apply that Iran was charging per ship? 10-year 4.2. Market really likes this headline, whether or not it's real. Market freaking loves this headline. I don't think we've seen below 4.3 in like 4 days. So I'm not sure if the headline is fully accurate, but it's enough to get people to buy up some bonds right here. SoFi just went green as well. Amid did you roll calls? No, I had 177.5 for NVIDIA. And, well, NVIDIA's at 176 now. So we might have to roll it. But as of now, we're not really there yet. 176.40. I mean, I was going to roll it today anyway, regardless of where it's at, because we got to roll these. But, you know, these strikes are still able to not really get hit as hard, given the choppy nature of this market. And I don't mind if NVIDIA goes to 185. I'll roll it, and I'd be more than happy to just own the stock and not have to get premium. But for that to happen, this thing has got to come to an end. Nebius right there, 108. Wow, 6%. This was a 95 in the morning, 95 to 108. Oil now 107. VIX now the lowest of the day at 24.60. If we can get the VIX to go red and oil to come back down to maybe 100, maybe to 99, that'll be your catalyst for a rally. We're underestimating how bad the jobs report will be tomorrow. That is fair, but remember, the one hedge on the jobs report being super bad is that it will give the Fed another reason to cut in the midst of no reasons to cut with increased inflation. So, yes, the jobs report probably going to suck tomorrow. Don't expect it to be good. But it potentially is something that allows bad news to be good news. Let's get an update on the private credit stuff as well, as that is another issue that's affecting this market.
For the shares in a technology-focused Blue Owl Technology Income Corp is what it's called, OTIC, and 21.9% of the assets in the larger Blue Owl Credit Income Corp, OCIC. Blue Owl says it will limit the payouts, as is its right to do so, to 5% of the shares in each of the funds. Of course, we've been reporting on this for quite some period of time in terms of the liquidity pressures that many of these funds are under as investors become concerned about the overall credit health of their portfolios, particularly given the focus of some of these funds in lending to software companies whose businesses may be significantly disintermediated by AI over time. Now, this is not a credit issue at this point. Blue Owl obviously is happy to point that out in its letters, talking about market perception driving elevated tender activity, underlying credit fundamentals, meanwhile, they say, remaining resilient. You can see that at the first part as they indicate just how much has been asked to be withdrawn. That said, seemingly the idea was in part that this would be a growth part of the business in terms of selling these funds through the RIA channel to retail investors, guaranteeing them or at least giving them significantly higher yields than other instruments that are out there. They've done that, by the way, to be fair, as much as 9% for OCIC. But you can see the reaction overall in Blue Owl stock, well off the lows, but still down. It does sport a dividend yield of some almost 10.5+%. Okay. So certainly some question as to their ability to withstand these kinds of withdrawals and perhaps the penalty they've taken in terms of their future growth and their
Blue Owl still giving you a pretty hefty dividend to get back into the stock, but these redemptions increasing are not the best. S&P goes red again. The headline for those that are just joining: Iran is drafting a protocol with Oman for potentially reopening the Strait of Hormuz. We don't know what conditions will be in that. We don't know what boats will get access to go through the strait. But that is your headline for why we, at least for a couple minutes, flipped green. It's a shame how we have to guess the market based on tweets and not profits and fundamentals. Yeah, didn't everyone see that meme of like the Trump market and the guy sitting in front of a computer with a Truth Social website versus like his charts? You trade this market based on Truth Social posts, not the charts, and it is kind of crazy that that's how it is, but that's honestly how it has been for the past couple of years. Yeah, to trade, you need to learn Trump's thinking. That's a great point. You actually need to understand what he actually means by what he says sometimes. I mean, imagine if the consensus trade was to go short this morning off of a speech that was not as much as what the street expected, and you went short. Like, you just got your face ripped off completely. And if you went long before the speech because you thought he's going to put an end to the war and we're going to pump even harder, you got your face ripped off. So it is not easy to try to navigate what exactly the president says. Bitcoin right there, 66.7. SPY going back down to 653.80. We'll see if that can at least hold the 650s. And then Tesla still at 365. Crude is at 108.50. Crude still at 108. Or just be an insider. That's fair. Or just be an insider. Yeah, I agree. This is also why you just buy. It's also why you just buy and hold for the long term. Again, I will say it over and over again. There are many, many discounts in this market. And if you have a very long trajectory, or not even a long trajectory, if you have 3 to 5 year outlook, if we don't get into some horrible recession, which I don't think we will, these stocks, their multiples are just too low for the earnings they're putting up and for the amount of liquidity in the system for them to not catch a bid. And we literally saw this over the past 2 days when the S&P was up 4%. Meta went from 520 to almost 600. Having said that, the emotional resilience you're going to have in that process, especially until this war ends. Grab flips green on their day, and so does Adobe, is going to be tested. Netflix, look at that, trying to go up to 100, 97.40. As that one continues to go up. What time do contracts auto exercise on expiration date? I think it's based on your broker, but some brokers 30 minutes before the market close, you're not allowed to do anything with the contracts anymore. So, usually a couple hours before, just to be safe, people either close or roll their contracts. But at least on Robinhood, 30 minutes before, you can't do anything. It might be a little different on some brokers. So, you want to be relatively around 12 p.m. on expiration day. You probably want to do something with the contract. MasterCard 494. SPY still red now after that jolt of green on the Oman potential draft with Iran. What do people do? Did people buy or sell? Put in the chat if you bought or sold anything today. I have not done anything. Yes, the 35,000 did transfer. Saw it this morning. Now the question is, when do we buy? Or do we just wait it out? Which at this point, given the volatility, honestly, it doesn't feel crazy to wait it out. NVIDIA losing its steam, potentially going red, 10 cents away. B Worthy says I sold ASTS covered calls. Punjabi Finance says I bought Meta. Patrick SoFi at $14.99. XLE. SCO, Nike. Dude, Nike's an interesting one. If you're buying Nike here, you're calling a bottom. You got to be calling a bottom. Meta, Amazon, AMD. Where's AMD right here? AMD at 212. Someone said they bought AMD at 201. Amazing. Spy puts. Johnny says this shit is too crazy for me, and I usually love crazy. This is a crazy freaking market, dude. Hood, Microsoft, Meta. All right, so kind of the core names that people are talking about, or that we've been talking about. Bloom Energy. This one got hit the other day. Bloom 136, still up from 70 at the lows. Hollis says flip a coin. That's about as good as anyone can be at predicting this market short term. Yeah, I mean, realistically, last night it seemed like it was over, and now it doesn't seem like it's over. It's like we are down 50 cents on the day on the S&P. I mean, like, this is nothing. This is literally nothing if it holds. So it is unbelievably difficult to predict this stuff. Meta right there at 571. Short QQQ. Is that up on the year? SQQQ, which is the inverse ETF, that is up 14% this year. Wow. So if you just bet against the NASDAQ, you'd be green. You'd be green. Wish the markets would just close right now. It is weird that we don't have the market open tomorrow. S&P going green again, 655. So we're not really going to get to see that much reaction. Credo under 100. Why is it weird? Well, it's just, it's a Friday with no market open. So I wonder kind of how people position themselves towards the end of the day, especially after we get that jobs report tomorrow. I will not be going live tomorrow. This is why the market is so central in my life, dude. Like, if there's no market open, what do we do? What do we do? Imagine I went live and we had 3 things on our watch list: Bitcoin, Ethereum, and the US 10-year. We just for 2 hours are like analyzing the second by second tick of Bitcoin, Ethereum, and the 10-year treasury. This is the cool thing about the market. There's thousands of stocks that all have different. The cool thing about the market is all these different stocks have different stories associated with them. And the fun thing about what I get to do every day is learn about all these different stories. Obviously, I'm not going to know everything about every single stock, but try my best to analyze those stories, interpret those stories, give perspective to those stories. Analyzing ELF is fundamentally different from analyzing Adobe, but Adobe has so many different subsectors to their story with Anthropic and the CEO leaving and all this different stuff. And then you have ELF with the tariffs and makeup. I mean, analyzing the market just forces you to know about a lot of shit. You're not going to be an expert in everything, but it forces you to have a at least surface level understanding of many different things, and then go deeper on the names that people care about the most. Yes, the market is opening on Monday. Amit, is it because of the Hormuz potentially opening news for why the market is green? That is correct. The Iran-Oman draft potentially is the reason. Even though that doesn't mean the strait is open, that doesn't mean we even know how many ships will go through, and nothing has been confirmed. But that headline tanked oil, which is why we're green. Dude, I said moot. I didn't say mute point. I said roll back the clip. I said moot. You guys heard mute because you're used to me making a mistake. It was moot. My O's sometimes sound like U's. That doesn't mean I actually Said it that way. Doug says, I sold Rocket Lab 5-1, 80 calls. 80 is rather conservative, but that is getting close to SpaceX IPO. So could Rocket Lab get a pump up to 80 just based on SpaceX? Yeah. And Rocket Lab was chilling around 85 to 90 for about a month and a half before it lost that level. 68.63 up 5% as well. Palantir 147.50. So are you investing in MU or MO? That's a good point. That's a great point. What was Steve's big news? I can't say. Steve is going to make a video himself and say it probably in like a week. But you guys will hear from Steve himself what his news is. Yeah, at least I can say bagel. The way Tanner says like bagel or something. I'm like, bro, it's bagel. It's more of a Canadian thing, though. There's certain words they say differently. ASTS, that's also moving. Redwire, that's moving. Again, I like the space trade. I don't think there's that much fundamental towards it outside of the hype around SpaceX. I'm sorry. If someone wants to give me something real fundamental, I would love to look at it. But a lot of this seems to be rooted in people trying to find a SpaceX proxy, which is not a bad thing. It's just, especially if you don't want to pay that much for SpaceX. But the question is, how much momentum do these names really have in them if it's all based on SpaceX? Long-term, space will be fine. It's an amazing industry. It's going to work out. Obviously, there's massive growth, massive potential. Commercial space is only growing. It's just short-term. Rocket Lab was 57. Why is it 68 today? What has changed? Same thing with ASTS was 78. Now it's 90. It's either just macro algos, which is fine. That's the reason, or SpaceX. I feel like it's more SpaceX because not every high beta growth stock has recovered to those levels. S&P goes red again. 654.74. What do you think about photonics? I can't buy it because the stocks have moved too crazily. I'm not buying AXTI. I'm not buying AAOI, which is up 17% today. But again, this thing was down 20% 2 days ago. You can't see the green days and be super excited when they're low float and a lot of the green gets hit with a lot of the red at the same time or on a different day. They're great for trading, but I'm not sure how much the industry can be commoditized. Same issue with memory. Do I believe it's a bottle chain or a bottleneck for the supply chain? Of course. Does that mean it's the next 10x? I don't know. Now, granted, Coherent and Light did get into the S&P, which obviously was a super big tailwind, and NVIDIA invested in them as well. So there's room for the story increasing, but those stocks are also up a lot. So if you're buying them here, you got to ask yourself, what is the risk reward that I'm fully getting? I ran right there at 34.40. That is green. They've all 10 to 30x already. Yeah, exactly. So I don't know. It's easier in this market to just pick really strong names that have their multiples compressed. They're not the biggest source of alpha, but they would help you, sleep at night. And again, I think the next big sector where we can find an Amcor, for example, or an AAOI, or some of these names, or a Micron, which now has become a bigger company of itself, that is a central part of the supply chain ecosystem, is humanoid robotics. I think that is going to be the sector where you find these very small names of companies that are doing stuff. But the problem is robotics aren't big yet. We don't really have robots at scale. And we need to, we've made billions of GPUs, not billions. We've made tens of millions of GPUs. That's a good question for Gemini. How many total GPUs have been made in the past 20 years? Let's see. We would need millions of robots to even get those companies to pop up. Well, no, since the year 2000, 2.3 billion. These are not necessarily the most advanced NVIDIA GPUs. The Gemini's interpreting it as graphic cards. Since 2024, according to JPR, which is a research firm, 251 million GPUs were shipped. Okay, so we're barely at like 10 robots. We got some work to do for that entire industry to meaningfully pop up. What about rare earths? Well, rare earths are interesting. USAR right there is up 9%. There's been a couple of rumors of those rare earth names losing some of the deals that they had. A lot of those were proven to not be correct, which is why they got the rebound after taking the dump. MP, I think their price target year to date, that's down 10%, was cut 2 days ago from like 90 to 75. USAR is up 9.3. CRML, a lot of these names had a run. CRML was 22, right? Yeah, it was 21.86 in January. Now it's at $8. When you see that type of a decline, it also makes you think that the run was fake. Like 21 to $8, like 21 to 15, 21 to 12, 21 to 17. Like, all right, it's down. But to get cut the way it's gotten cut makes you think it never should have been there. And January was a super high beta month. However, you're right. They're trading at much cheaper valuations compared to where they were. So maybe there is a broader thesis that is inside of the name. IGV, $80.15. That is also slightly green. Wouldn't they make the hood run fake? Yeah. And by the way, when it was at 150, myself, Tanner, and Roy were saying this is not sustainable. This is a bit aggressive. Probably shouldn't be at 150. You're allowed to be happy as a shareholder when your stock goes up without blindly defending the valuation, which I think I've been very transparent over the past couple of years. Palantir also has an aggressive valuation. And admit, like, look, this is a lot for a stock that is still contingent on a bull market in the case of Robinhood. So yeah, that 150 was fake. And that 150 obviously was not sustainable. But again, I can admit that. Tesla Larry. It's hard for him to admit anything about SpaceX. Like, if you're a SpaceX bull, and like I know about 3 people that have been invested in SpaceX since it was like $100 billion. Like, I know some people that are sitting on some really, even they are just like, dude, this shit is stupid. Now they're happy that they're sitting on a 20x, but they're also like, dude, this shit is stupid. Like, 1.75 trillion is absolute insanity. It's crazy. Should be able to admit that stuff. Like, it's okay to be able to say some of this stuff is aggressive. Do you own OSS? Yes. Where is OSS? We are at 736. This one, again, holding strong in that $7 to $8 range. Fell below 7 for a little bit. Small cap, one of my favorite small caps. Edge Compute is the theme. They need a much larger military contract, which, given the prototypes that they've been able to achieve, I think they will get it. But again, it is just not a safe play like a Meta here. It might have a lot more alpha, which is why it's a position in my portfolio. I have a lot of safe stuff and I have a lot of risky stuff as well. Just proportionally weighting some of the more risky things with the safe stuff is what's important. What price would you buy SpaceX? That's a good question. Put in the chat. What would be your valuation on it? Look, 500 billion would have got me a lot more interested. And I think that's still aggressive on 15 billion in revenue. But for the potential of what SpaceX can do, 500 billion is like, okay, that's, you take a shot. I mean, that's lower than Tesla's valuation. You take a shot at it. But, obviously it's not, there's too much demand. And that's how a market works, right? If there's way too much demand than the supply, then you get to raise prices. And so 500 billion is way too cheap for the level of demand that's there, even if fundamentally it's not cheap. And that's why it went to $1 trillion, then 1.5, now 1.75, probably going to open at 2 trillion. It's just not something you have to participate in if you think it's too much. Yeah, most people here are saying 350 to 500 billion. I do not own MITK. I do not own that one. The best I can do is $1. The other thing that rubs me wrong about the SpaceX IPO is that I think Elon's pumping this data center and space thing way too heavily. Like, it's just obvious he needs a story, which is what he should be doing. Don't get me wrong. because he needs to sell the stock. But when you listen to someone like Jensen talk about it, Jensen's like, it's not really possible. Liquid cooling in space is not easy. And NVIDIA's been in space for years and no one's really cared. They don't have a crazy multiple on their stock because of being in space, because it's just not that big of a market yet. Now, maybe it will be in the future, but as of now, it's not necessarily the case. By the way, let's get an update on that Iran draft protocol and see if we can get some more coverage on it.
In Iran, saying that the Iranians are developing a protocol for Iran and Oman to monitor transit through the Strait of Hormuz. That seems to be the thing that drove the market higher a short time ago. They're saying that the foreign minister official there pointed out that even in peacetime, ship traffic should be supervised and coordinated with the coastal countries, Iran and Oman. And the foreign ministry official said, of course, these requirements will not mean restrictions, but rather to facilitate and ensure safe passage and provide better services to ships that pass through this route. So that is Iranian state media quoting an Iranian official talking about the prospect of a deal with Oman for no restrictions on ships traveling through the strait. Of course, there's a lot to unpack there. No guarantee that would happen, but that does seem to be sort of the favorable media that's been moving markets over the past, say, 45 minutes.
And Eamon, how do you think other countries are reading this report? Do you think it will incentivize them to also try to craft a similar deal with Iran?
I mean, it sounds like the bargaining is open, right? And if you want to get a deal, get in there. I would imagine that the people who get in early might feel that they're getting a better price for their ships getting through the strait. And those who come in late might be the other way around. Of course, we've seen reports that the Iranians are prioritizing countries based on their degree of relationship and friendliness with Iran over the years in terms of the pricing of what that shipping might be through the Strait of Hormuz. This is a brand new power that the Iranian government now appears to have. The question is, how long will they hold it for? Will they sort of maintain sovereignty over the Strait of Hormuz indefinitely as a result of this war that the United States launched just about 5 weeks ago?
Yeah, I mean, when the president says that the strait will reopen naturally, that's probably not what he has in mind. We'll learn more in the weeks to come. Eamon, thank you. Eamon Javers. For more on how the markets are thinking about these latest headlines around Iran, let's bring in Jeff Solomon, TD Bank U.S. Vice Chair and Special Advisor. It's good to have you back, Jay.
Good to be back.
You willing to make a call on how this ends?
I mean, listen, no, because no one knows for sure, but I think you can probabilistically look.
He sounds like me. It's really freaking hard, whether you're the U.S. Vice Chair at TD Bank or you're a retail analyst trying to figure out what's going on.
Look at things. And the likelihood, the base case, at least from my standpoint, is that it's not going to go on forever. We're not going to have a long ground war. I think Americans don't have the stomach for that. And I don't think the president has the stomach for that either. Just, it's hard to get inside his head. But, everything would suggest that that's not the case. What I will say, though, is I think you need to look beyond the military conflict to the economics of it. It does Iran no good to have the strait closed. It does the allied forces no good to have the strait closed. So there's an economic reason why both would want the strait to be open. And it doesn't surprise me that Oman and Iran, who have probably the closest relationship, because they monitor that, will come up with some sort of a structure to enable I would say, increased flow of oil. Both sides of this conflict would like to see oil flowing again. And so, the economics ultimately will win out because the rest of the world needs the oil that flows through that strait. Right. So I just think that tells you all you need to know.
But if they have a new toll-taking power, right, that sounds like a strategic failure in terms of this operation.
So I don't agree with that. They always had a toll-taking power. They just didn't enforce it. So,
but now they are.
Well, then okay, that's a money thing versus a potential nuclear Iran. And I know there's a lot of debate over whether or not Iran would have a nuclear weapon, and I don't have any inside information on that. All I would say is, again, when you look at the markets, probabilistically, is it a 1 in 5 chance? Is it a 1 in 10 chance that we end up with a nuclear Iran? Whatever that probability is, it's too great, because once they did have a nuclear capability, the next move for them is to close the Strait of Hormuz. Like that is, so either way, whether this conflict was started or it wasn't started, we were going to have a toll-taking capability here in the Strait of Hormuz. That was almost a virtual certainty, in my opinion. And so here we are. It's just going to cost a little bit more. because Iran will need to charge a toll to get through the Strait of Hormuz, but so will others. And so I think this is where we were going to end. Ultimately, it's just now we're here.
Do you think we go in and take some uranium?
I don't have a strong view.
Because they are still in control of a fair degree of highly enriched uranium.
They are, but again, if you just look at, and I'm not in a position where I'm communicating on behalf of the administration, nor am I having any conversations.
Right.
But at the end of the day, if this conflict ends and you just have a degraded military power in Iran, it's not a bad outcome. I don't know what's going to happen with the uranium, and of course they're going to try to rebuild, but okay, it's not going to be any worse than what it was before this conflict started in terms of the threat from Iran. So I just think that's the base case, and markets need to really sort of factor that in. I get the emotionality of it. Nobody wants war. It's terrible, right? There's no good that comes to this. I'm just looking objectively from the standpoint of the markets. People need to factor in that this was a likely outcome. We are here. Now they have to assess what does that mean going forward, and what is the framework going forward. I actually think the framework going forward is better than it would otherwise be with a nuclear Iran, but that's my perspective.
So you're saying that this market can resume its upward trajectory despite oil well above 100?
Here's what I would say. I had dinner last night with Bill Cowher, who was the coach of the Pittsburgh Steelers, right? And he said something in our conversation.
Why is he trying to flex? You had dinner last night with the coach of the Pittsburgh. Okay, cool. We're in a war. I hope you enjoyed your dinner.
Conversation that was prescient. He's saying things are never as bad as they appear, never as good as they appear, and they're never as bad as they seem. He was talking about it in the context of the emotionality of coaching a football game, to be honest, and how do you maintain your level-headedness when there's a lot of emotion flying around. But you could apply the same standard to markets. Things are never as good as they appear, and they're never as bad as they seem. This threat of Iran has been around for a very long time. Okay, the markets.
But it's increased clearly over the last month.
It was increasing anyway, and the markets could or should have been factored in. Last time I was here, we talked about this. I said I thought the Fed was going to ease. I thought that there was coast to skirt, but I also said, whenever I'm feeling really good about what's happening in the market, there's always something lurking out there that I don't know about, the unknown. And so that's kind of always been a signal to me in my career that there's bad stuff that potentially could happen. Okay, here we are. There's now a war in Iran, and it's throwing the market into some volatility. My advice to people is stay the course. The economics, as long as this doesn't go on for a long time, the economic situation will rectify itself once there's a resolution here. And everybody on both sides of this has economic incentive for there to be a relatively quick resolution.
What would change your thesis then if we don't see a quick resolution? Because last night, the hope was we would get some type of concrete timeline. We didn't get that.
Yeah, there's no way to get a concrete timeline until there's a framework in place. And so I didn't expect we would get some sort of I expected that we would get more of what we got, which is that we're going to continue in the United States to threaten to degrade them militarily if they continue to hold the Strait of Hormuz hostage. But in there is a deal. You allow oil to flow through the Strait of Hormuz, we're probably willing to back off. And at the end, Iran will have been degraded militarily. That is a certainty. And so the president does, I think, a really good job at keeping people off balance. That's sort of one of his strategies, right? We need to be able to look through that in the markets and understand what is the most likely, what is the most probable outcome. And right now, my view is the most probable outcome is that this conflict ends within a few weeks. We get a return to the flow of oil through the Strait of Hormuz. Oil prices come down, and this does not have a long-term economic impact.
So it never happened?
I wouldn't say that it never happened, because it happened, but the markets will adjust to whatever that new normal looks like. That's the base case. Obviously, things can go off the rails. Obviously, if there's no governmental structure on the other side of Iran to actually make a deal, or it's fractured, or you end up with little cells that are...
Sure, Hydra, yeah.
Right. Okay, that's a different outcome. That's currently not my base case, but is it out there? Sure, it's out there. I think the markets need to...
Before we let you go, is your base case that this resolves and we get to all-time highs again?
Yeah, I do. I think I don't know when that's going to happen. I'm not going to say it's going to happen like in the next month or two.
Right.
But this year,
yeah, there is a lot of economics at stake for both sides of this conflict, right? We talk about the impact at the pump because that's what we focus on. If you're in Iran and you're in the merchant class in Iran, this is a terrible outcome for you.
Or if you're in Japan.
It's a terrible outcome for everybody. And so my view is that that's not long-term sustainable. We don't like economic pain. Nobody likes economic pain. And when it gets to a point where somebody says, okay, we need to figure out how we're going to get an off-ramp here, it'll be because the economics for each of the global economy, the economics for people individually reaches a point at which we can no longer have it be a conflict.
Well, what is that point? I think is the question. I don't think he really said anything that different in terms of what is the most obvious thing anyone could conclude, which is that eventually when things get too bad, I mean, essentially he's saying there's going to be a taco. He's saying when things get really, really bad, 5% on the US 10-year or something, that would be, more than really bad, then the US pulls out and the strait reopens. The problem is over the past 2 days, the market thought we had already hit the worst of it on Monday. And then when Trump announced what he announced on Tuesday, along with the corresponding headlines that started to kind of confirm the idea that the war was going to end, that's why we rallied 4%. And the punchline to all this momentum was supposed to be last night in the speech, which was supposed to de-escalate. And that didn't really happen. Now, was the market sell-off a bit aggressive on Trump not really definitively de-escalating? Yes. I think it was 2% down was a bit too much, which is why we basically recovered. But the idea that we just push through and go green and oil continues to fall like a rock, again, it is all contingent on what the guy said, the strait reopening. But his interpretation of the strait reopening is that it's going to happen in a week once the U.S. leaves. And I think the counterpoint to that, which I don't necessarily disagree with, but the counterpoint is the U.S. can't leave because they want the strait to open, because that's going to be them losing the war, even through perception-wise. This is why Trump keeps, again, reading into sort of this 7D chess that Trump is playing. The reason he keeps saying NATO should just go take the oil or NATO should buy oil from the U.S. is because he's trying to downplay the significance of the Strait of Hormuz, which is once again why the market dumped last night, because the Strait of Hormuz is obviously very important. That's why the market just pumped, because Iran and Oman are coming up with a draft to potentially reopen the Strait of Hormuz. So if the analysis is Trump will leave, the Strait of Hormuz will open, everything will be okay, sure. But if Trump doesn't want to leave because he thinks he's being forced to leave in order for the strait to reopen, which is what the Iranians are doing, they're saying, hey, if you don't leave, we're not going to reopen it. Trump wants to leave on his own terms, and he's not doing that. And the Iranians want to open up the strait on their own terms, and they're not doing that unless, Trump leaves. So the idea that everything just goes back to normal until this thing comes to an end, I don't know if we necessarily see that. Dude, even analyzing this thing is just like trying to read between the lines and try to make sense of it. It is crazy. Like every morning I wake up and my brain cells better be ready to try to break down the breakdown of the other side's interpretation of the other side's breakdown, to try to even kind of have some way to make sense of it. And then when you actually say it, it doesn't even make sense. It's like maybe makes sense if you put it together. 654, we're going red on the S&P. Also, I do not flex like that. People in the chat saying you flex. When have I ever flexed? Like, I had dinner with the former coach of the Pittsburgh Steelers last night. Like, you could have said, I was talking to a former coach one day, and he said, because he made a very basic football analogy and compared it to the war, which, as Uzi said, is peak America, comparing a war to football. But he was like, I had dinner last night with this guy who's a famous former coach. Like, that was absolutely a flex he wanted on live TV. And it just sounded so cringe, because it's like, dude, we're in a war. No one gives a shit about your dinner. It was absolutely a flex. 654 S&P. Yeah, it was not a humble brag. It was a straight up flex. Oh my gosh. Oh my gosh. 654.30. ServiceNow down 2.5. Ethereum 2000. I mean, if we end flat for the day, I'll be happy with that. Bitcoin 66.7. Gold and silver still both red as well. That's true. I do name drop the White House quant all the time. Do you think buying leaps on Mag 7 names like NVIDIA, Meta, Amazon, Microsoft outperform at these levels seems like a no-brainer? Nothing is a no-brainer when it comes to derivative contracts that have a timeline on them. Buying the core equities, I think, yes, will outperform over the coming years. But the idea that Microsoft recovers back to 550 in a year, which, you know, if you're buying leaps, you would probably want it, depending on your strike and the premium you're paying, to get closer to that 450, 550 range. I mean, who knows, dude? Who knows if it's another couple years of Microsoft being flat before that takes off, which I wouldn't expect, but just like, why would you want to put a time frame on it? Like, again, you buy options when they look incredibly, incredibly attractive. And I'm not saying options on some of these names don't look attractive, but imagine this war doesn't actually come to an end for months. The theta on those options get destroyed. And then if the war results in some level of a recession, you know, you can kiss goodbye to the premium multiple that these Mag 7 names have, because that's contingent on the economy actually doing well. I mean, there is a world where we get a recession and Meta's like, I don't need to spend that much CapEx on GPUs. And then NVIDIA goes down the drain. It's a very easy scenario to see that playing out. We're just all assuming that doesn't happen. But if you have options at that point, you know, they get screwed. So I don't know. The guy was making a point and backing it up that a 3-time Super Bowl winning coach also made the argument. Yeah, but saying that he had dinner with him last night, that was unnecessary. You could bring up a point without saying that. Again, obviously, I'm just like, I don't really care. I'm just poking some fun at it. But, you know, there's a time to flex and there's a time to like leave the flexing behind. And when everyone who's watching CNBC is down a lot of money right now and you're talking about the fancy dinner you had, is like, I don't know, it's just cringe. It doesn't really feel like a real flex. Someone sounds kind of dude, I don't even know who that guy is. Who is this coach he's talking about? I have no freaking clue. The only NFL coaches I know are Bill Belichick and Andy Reid. Is that the guy's name on the Chiefs? Yeah, Andy Reid. Those are the only two I know. Oxy, is that pumping? No, that's down. It was up 5. Now it's down 1 or up 1. AMD getting a little bit of love. SPY still 654. No, 655. Trump still has 3 years left. That is true. He still has 3 years left. He still does. Dude, did you guys see? I didn't even watch this video. I saved it, but I didn't watch it. Kamala, before the speech, put out a video. I mean, you're going to have to see a lot more of the Democrats doing this stuff to market that this war is not the best.
Hey, everyone. So I'm not going to be able to watch the president's address tonight. But here's the thing. He brought America into a war that people do not want. He has put American troops in harm's way. Costs are rising by the day. And meanwhile, he has done nothing to address the needs of the people of America. And I bet you he's going to try and claim victory tonight. But the reality is we're watching what he does instead of listening to what he says. Hey, everyone.
You know, Harris is up there with the leading Democrats for 2028, S&P going green again. The top 2 contenders from the poll I saw yesterday, or top 3, is Harris, Shapiro, and Newsom. Harris, Shapiro, and Newsom. There might be a world where she runs again. I mean, I don't think she will, but the talking point on the Democratic side is going to be that this war was unnecessary, which is why the quicker Trump ends it, the quicker that talking point starts to get diminished, because just like the tariff stuff, I mean, like, you can make the argument that it was really bad, but if it starts to kind of not be as relevant, it's hard to make the talking point. But if it continues, obviously there's more pushback. Microsoft just flipped green. Nice to see. Rocket Lab Palantir still green. S&P, I think for the 5th time today, is flipping green. But we are not at the 657 highs that we had today. No, Josh Shapiro, not Ben Shapiro. Ben Shapiro would probably not be running as a Democratic candidate. The other thing that I read last night, and this part is actually a bit concerning, and part of the reason the markets are so on edge is because, do we believe Trump is legit going after Cuba? Because you had a couple of Republican pundits come out last night saying, trust me, Cuba is next. And it really begs the question that, let's say the Iran thing is done in a couple weeks. That's the best case scenario. Do we have a new side quest into Cuba? Now, obviously, Cuba does not control 20% of the world's oil supply, so it's a different dynamic. And I don't know how much the market would care about it, but it is still one of those things where if we now decide to go after Cuba, I wonder how the market's going to react to that and how this ends up playing out. Yeah, this was the exact claim. I heard it from 3 different Republican pundits last night. Cuba will fall before Trump's term. I mean, some of them were saying in the next 3 months, by the end of the summer, the U.S. will have control over Cuba. And I'm just like, who the hell are they talking to? Like, I know Trump has said it, but like, are they that close to the administration that they're getting some intel that like, this is legit the next like thing that Trump's, because again, I don't know if the market's going to care that much about that. But if they do, then right after Iran, if we have a new issue to deal with, it obviously might not be the easiest thing for the markets to digest. So I guess time will tell. Well, they weren't saying it's going to be a one-day event like Venezuela. I mean, the people I were listening to last night are saying like he's pretty set on taking over the entire country, which is like, and Trump has said this, by the way. It's not a secret. It's just, okay, that would be a big development. Here's the update as well on the tariffs that we talked about this morning.
According to a draft of the document obtained by CNBC, I do want to flag that Endpoints had that earlier, but now we have a copy that we're looking at. And so in this draft, it says that companies that haven't signed deals with the Trump administration would be subject to a 100% tariff on patented drugs and related ingredients. Remember, more than a dozen drug companies, including Eli Lilly, Pfizer, Johnson & Johnson, they've all signed these deals with the administration that exempts them from tariffs, and that is in here. Generic drugs and orphan drugs would also be exempt from these tariffs. There's a lot of exemptions in here, but companies that have plans to onshore production would face a 20% tariff on branded drugs and their ingredients, and that would increase to 100% 4 years from now. And there are separate rates for the EU, Japan, South Korea, Switzerland, and the UK, but based on those.
So this isn't that new. We knew that Trump was going to be imposing those tariffs, in particular from pharmaceuticals. The question is going to be, can he legally justify these tariffs, given that he's going to have to use new sections to be able to make sense of them? And obviously, no one fully knows if that's going to take place. But I don't think that's going to affect the market that much, because this was to be expected early on. From January. Let's get an update on the SpaceX stuff. It looks like we got a SpaceX early investor talking about the valuation. Let's see how they kind of make sense of this.
They voted to reinstate it anyway. And then last year, they approved a new one worth up to $1 trillion. That was the largest in corporate history, even over the objections of every major proxy advisors and some institutions. Now, Musk wants to build that same structure into SpaceX from the jump, except this time it's a company with no track record. As one source tells me, if he actually needs 30% from retail, that tells you something about the price. Now, the only real precedent is Saudi Aramco, which also gave retail about 1/3 of shares in its listing back in 2019. Now, that was widely understood as a loyalty play, nationalistic play, not a market clearing price. And the stock it went sideways for years if you look at that across its history. Retail access, it is a good thing when the price is right, of course, but if SpaceX proves you can hold a $1.7 trillion valuation by loading up on retail, it could also set a precedent for the other blockbuster IPOs this year. No doubt OpenAI and Anthropic are watching this, and it could become the playbook for how the entire AI sector, pure play AI sector, enters public markets, guys. This presents
this, I would look back towards the last 20 plus years that they've been in business and what they've been able to accomplish. And if you look just last year, right, they launched 170 times. That represents 90% of the mass to orbit. They've launched one of their first stages over 30 times. Like, that's an incredible statistic, and what it does from a usability standpoint and a cost standpoint in terms of access to space. But when you talk about Starlink, right, this is a constellation that has 10,000 satellites. It's the largest constellation that's ever been operated. And the crazy thing is it's 10x bigger than the second largest constellation. They operate in 160 countries with Starlink, have 10 million plus subscribers. So at the end of the day, this is a really huge business that's growing really fast.
It's an exciting space, but also not a lot of comparables, Justin. So how should investors at home value launching rockets, the commercialization, Mars, space tourism?
So the way we look at this really is from a vertical integration standpoint, and I think you can see this across other companies that Elon has built, right? You needed the launch business in order to launch the Starlink business. When you talk about data centers in space, right? This is a combination of the skills that they.
Okay, so this is a guy who invested a long time ago. The first two things he said to justify the valuation are vertical integration, which I don't know how that justifies the valuation. I understand why it's important. I don't know how it justifies the valuation. And then he just mentioned data centers in space. You have to remember, these investors are essentially being coached to talk the story of SpaceX from Elon, which is what they need to do. That's their job, to generate some exit liquidity. And data centers in space seems to be the narrative. So let's see what else he says. But these are two things that, again, are just not that convincing in terms of explaining why it should be valued at this level.
They've built over the last 20 years. They recently announced their plans to do chip manufacturing. I think there's an opportunity to do manufacturing in space. So there's an incredible
manufacturing chips in space. Not saying it's not going to happen, but goodness, like, this is stuff that's not happening next year, not going to affect the revenue in 2 years, I would say. So you're really buying the potential here. That's basically what they're saying.
Number of places where this company can go. And I think we look at it from the lens of vertical integration.
There's Amazon.
I think we look at it from the lens of vertical integration. That's like, come on, dude. Like even the most average retail investor would be able to say, I think we look at it through the lens of vertical integration as a justification for a $1.75 trillion valuation with three things that you said, which is vertical integration, data centers in space, and chip manufacturing in space. I mean, goodness, you could have at least brought up Starlink. Like that is why this valuation's a bit scary.
On eyeing this $9 billion deal of Globalstar. Is there pricing power in satellites, and is this market prone to be saturated at some point, do you think?
I think the real challenge for everyone is just getting enough launch capacity, right? I mean, even for SpaceX, where they have their own vehicles, they are trying to launch as much mass to orbit as possible. And so that's really the constraint in the system. And when you look towards their new Starship, that is what's going to help increase the capabilities there. And so that's what we're excited about, when you look to like, what is the next launch going to be, right? They've got a Starship launch coming up in the next few weeks.
It's true. What do you think could go wrong, Justin, as all this hype and excitement grows ahead of this IPO?
I mean, I think this is a company that sort of independent of macro events can really go public in any environment. So it's really about running the process well and executing. And that's something this company has done incredibly well for the last 2 decades.
And your thoughts on how this could influence the other two big IPOs we're expecting this year, Anthropic and OpenAI? I imagine they're going to be watching this one very closely.
I'm sure they will. And obviously, with XAI, there is some overlap in these businesses, but, this is a different business than both OpenAI and Anthropic. These are, like I said, this is a much more vertically integrated business. I think the opportunity sets, in terms of how they can execute in space, in terms of data centers and Starlink and things like that, it's fundamentally different than when you look at those two companies.
Okay, just
Yeah, I don't get it. I don't get it. And I mean, even if you did mention Starlink and vertical integration is super important, that's just like that's not. I don't. You can talk if he means vertical integration in the context of Tesla being vertically integrated with SpaceX, then you got a different question. But then the valuation would be like pushing $3.5 trillion because I would imagine you combine their market caps together at that point, which would be a different question of how expensive it is. But data centers in space, chip mining in space, and vertical integration, these are very qualitative, hypothetical ideas that are just not manifesting in a meaningful growth story based on the valuation that it's at right now. So again, I still think it's going to pump. Like it will probably go to 2.3 trillion when it goes public just for the sheer hype of it. Question is going to be, can it sustain there? And if it doesn't, then maybe there might be a really good opportunity to buy this thing. But if it does, it might just have an Elon premium forever. And it is what it is. That's what Tesla's had for a very long time as well. Keyword vertical. That's the number. That's the word that we need. Yeah, I don't literally mean coached by Elon. My point is just like Elon sets the framework for how to talk about the SpaceX IPO. So all of these investors that have been investing for the past 10 years in SpaceX, they're obviously going to adopt his framework on how to discuss it because, I mean, quite frankly, a lot of them don't know how to sell an IPO to retail. I mean, they're talking to retail here. They're not talking to institutions. They're talking to people like you and me on why we should buy the stock. That's why I'm spending so much time dissecting it. And so Elon obviously knows how to talk to retail. He's done a pretty good job at that. And that's what he should be doing. But these other VCs that are trying to get their freaking bag and distribute their returns to their limited partners, I mean, they need to make sure this IPO is very successful to get and they need to keep it successful for at least 6 months so that they can really exit. Sort of that's how it seems like the VCs are talking about it in the context of these very vague arguments on, why they own SpaceX. We'll see. Maybe markets will go green. It'll be bullish. We'll have Anthropic, OpenAI, everything go public at the same time, and maybe we'll be in a broader bull market after this war is over. But as of now, obviously, it's kind of hard to even imagine those valuations sustaining themselves if oil continues to be at these levels. Whereas crude, we are at 110 on crude, and the S&P is flat today. The fact that we're flat and crude's up 10% has got to be somewhat good. Because you would imagine crude being up 10% in less than 24 hours would not allow the S&P 500 to be basically flat on the day. So we've recovered the lows so far, and hopefully we just stay there to end out the day. All right, that is it for me. We'll be back on the market close. Once again, almost close to 12 p.m. The days are going by quick as we are on the second day of April. Let's do word of the day. We'll be back on the close. We'll talk some macro on the close, see what's going on. I don't think we have any earnings. And it will be the last. It will be the last freaking day of the week. It'll be the last day of the week as the markets will be closed tomorrow. Epigrammatic. Expressing an idea in a clever, concise, and memorable way. His take was epigrammatic, one sentence that said what others needed 10 to explain. Okay, usually I'm the opposite. Usually I think I need 10 sentences to explain one thing. I don't think I'm going to say this wrong. This one sounds pretty reasonable. Epigrammatic. I think this should be okay.
Epigrammatic.
All right. There you go. 2 for 2. We're 2 for 2. The biggest moment of the stream, though, was this freaking Bon Jovi thing, too. I really thought it was Bruce Springsteen. That's the only thing that mattered today. That now I know 1986, Living on a Prayer from Bon Jovi. It would be so good if it was Bruce Springsteen because Trump is mad at him. And I'm like, man, I guess to get through this war, we got to live on a prayer. Like, it would have been so good. Why couldn't he go after Bon Jovi? Just to make my punchline hit. Why couldn't he have picked Bon Jovi? Now we know. Now we know. Okay, I think Steve is live, so I will link his stream right there. You guys can check out Mr. Steve as he's covering the lunch hour here. What do we spam him with? That is the question. What do we spam him with? Oh, we got to do it. Bon Jovi. We have to. Bon Jovi. Bon Jovi is what we spam Steve with. Steve's probably going to be mad when he realizes that I didn't know who made Living on a Prayer. But Bon Jovi is what we spam him with. And I'll be back when the market close. All right. Thank you, everybody. Have a great day. Appreciate everyone being here. Covered some of the green. Hopefully we keep it. And I'll see you guys on the market close. Bye, everybody.